Welcome to the Joint Appropriations Committee. Can we have a roll call, please?
Representative Kinner.
Here.
Representative Larson.
Here.
Representative Schwartz. Here. Representative Simpson.
Here.
Representative Stith.
Here.
Representative Walters.
Here.
Senator Garou.
Here.
Senator Hicks.
Here.
Senator Kinski. Senator Steinmetz. Co-Chairman Perkins.
Here.
Chairman Nicholas.
Reluctantly here.
Mr. Chairman, you have a quorum.
Okay, any opening remarks or comments? Mr. Co-Chair?
Mr. Co-Chair, no. The only comments I have, just welcome and appreciate the work of our staff in getting ready for today, and can you get ready for the work we've got to do over December and January, and Kevin's up to his earballs right now. Yeah, getting ready to get it to us. So we just want you to know we appreciate and recognize the work you guys are doing. There's a lot of it, and it takes a lot to get ready for all this. And so, thank you to our members who traveled down, and to the folks who are come to participate today. We appreciate public engagement, public involvement. That's what this is all about, is providing an opportunity for people to speak to their legislators and help us give us all sides of stories and give us information so we can make the best decisions that we can for the state of Wyoming. So thank you, Mr. Chairman.
Thank you. First on our agenda is Don. Welcome. We have a motion?
Move to adopt the minutes from last meeting.
We have a second? Moving seconded. Any discussion? All those in favor say aye.
Aye.
All those opposed, that motion carried. Go ahead, Don.
Good morning, Mr. Chairman, members of the committee. My name is Don Richards. I'm the Budget and Fiscal Administrator for the Legislative Service Office. I appear before you today wearing the hat as the co-chairman of the Consensus Revenue Estimating Group, or CREG. I'm joined today with Kevin Hibbard, the State Budget Director, who is also the co-chairman of the Consensus Revenue Estimating Group. I also wanted to acknowledge all 9 members of the Consensus Revenue Estimating Group, including 2 brand new members. Director Brenda Henson with the Department of Revenue joined the October CREG meeting, and Interim Director Tom Kropatz with the State Oil and Gas Conservation Commission, who has contributed. I also wanted to recognize the Wyoming State Geologic Survey, who contributed some of the most sophisticated analysis on our minerals projection, reviewed our drafts, and did so with reduced staff. And finally, I'd like to recognize some LSO staff, in particular Dean Tempty, whose years of service on CREG exceeds all 8 of the other members combined on CREG today, excluding myself.
Mr. Chairman, can I offer specific condolences to you?
I also want to recognize Leanne, whose contributions you will find in the appendix, which is involved in the prediction intervals. And for his first time with LSO, Matt Wilmarth contributed to CREG in this fall. In terms of context, actual revenues exceeded January CREG forecast and are poised for higher levels than previously forecast going forward. There's no question that the economic impacts resulted in a meaningful reduction in state revenue collections, especially in calendar year 2020. However, the rebound economically, especially in natural gas prices, which are in the mid $5 range as of this morning, oil prices, which touched $85 this morning, and sales and use taxes have rebounded quicker and more robustly than was previously forecast by CREG. Simply put, revenue collections were materially lower, but declined less than previously forecast. This miss that CREG has made has been replicated in many other states, as well as private forecasts, with their challenging environment under the COVID-19 environment. CREG members are abundantly mindful of the deviation between our prior forecast and actual collections. It is fortunate that we're on the right side of that, but we're mindful going forward of the policy implications of the inaccuracy. Recall the January forecast was created and did not include any of the economic implications of the ARP Act. It hadn't been passed when we last met. Nonetheless, justifying a miss by noting that so did everyone else is unsatisfying. While actual revenue collections for FY21 are substantially in excess of forecast, I would submit to you that it should not come as a surprise. We have signaled this, Craig, Kevin independently, and myself in formal and informal comments dating back to our April 2021 revenue update. We did so again in the July 2021 revenue update. Now for the new bottom line. Actual revenues exceeded the Craig forecast for fiscal year 2021 by $248.2 million. For the balance of this presentation, I'm just going to round that to $250 million. That's actual cash on hand. That is not a forecast. That is actual revenues in excess of our forecast. This beat is largely attributable to higher natural gas prices, and in particular, the winter storm Uri that impacted the state of Texas resulted in dramatically higher prices for Wyoming natural gas. For the week during that storm, Opal was trading near $200 per MCF. That average impacts the entire annual average of natural gas, which is traditionally selling at $2 to $3. Secondly, oil prices significantly exceeded our expectations and are doing so currently. Third, higher sales and use taxes, primarily attributable to retail sales, as well as leisure and hospitality, were much stronger than anticipated through the late spring and summer months. Finally, capital gains and deposits into the Lsra and even in income pool benefited the Craig forecast. Most of those gains flow through the spending policies and don't impact that bottom line. And I'll address those particulars later in the presentation. So those are the four areas: natural gas prices, oil, sales and use tax, and some capital gains. Looking forward, Craig increased its forecast for higher natural gas prices in the near term. We increased our price on oil as well as our production forecast on oil, and we have somewhat higher sales and use taxes. The biggest part of the forecast increase includes this fiscal year 2022. And given that we're already 3 months into that fiscal year, there's a higher level of confidence we have with that increase. Our increases in 23 and 24 are more muted. And by the time we get out to 25, 26, our increases are our forecast is very similar to that which we released back in January. Over the 3 fiscal years, and this is an important concept because as you prepare your 23-24 budget, you're actually going to benefit from 4 years of revenue. The actual revenue from FY21, which I spoke about, $250 million, and then 3 additional forecast years, the rest of this biennium, 22, 23, and 24. So a total of 4 years. If you turn to page Romanet 2 of the cover memo and table A, it will illustrate that over the next 3 years, the Craig has increased its estimate by $596.9 million. That averages about $200 million per year. Now, I recognize the vast majority, or the majority, not the vast majority, occurs early in the forecast period and the balance outside. But for rounding purposes, I will just look at that as $600 million total that we'll be adding to the forecast in terms of forecast revenues. So if you add the 250 actual plus the $600 million in forecast revenues, the net increase in this report is $850 million to the bottom line. And I think for those in the press, that's the takeaway here, $850 million increase over the January report relative to the general fund and budget reserve account. There are some spending policy adjustments. modest amount of reversions, less than $4 million. And so I won't go into those details. Furthermore, that $850 million is entirely on the revenue side. That does not include any federal funds, ARPA funds, or conserved general funds. These will slowly be added to the fiscal profile when we get to that. And in fact, the first $121 million has already been added as the Department of Corrections is currently being funded with federal funds as opposed to general funds for this current fiscal year. That appears on page 2 of the profile, line 26. That's on the goldenrod. So we have added that $121 million. We will not see the balance of the $503 million that is eligible for revenue shortfall purposes under the ARPA Act until the governor submits his 23-24 budget forecast. However, if he uses those funds to conserve general funds, the net impact is approximately $1,350 million once you add that $500 million to the revenue side of $850 million. That's the all-in number. That doesn't appear yet, but I'm just signaling that if the governor does indeed conserve those funds, the total all-in number will be about $1.35 billion. On the K-12 operations and capital construction side, actual revenues did exceed the forecast by a much smaller amount, $69 million. And of that, about $36 million was subject to the spending policy, which then flowed through into the reserve account. And ultimately, $16 million was deposited into the permanent corpus this year as designed.
Mr. Co-Chairman, just a quick question for Mr. Richards. Mr. Richards, going back to your comment a minute ago that the all-in number was, I think you said 1,300 million. That included the ARPA other funds. What about the Lsra and some of the other funds? Are any of those types of funds included in that?
Mr. Chairman, excellent question. No, they are not. And neither are the ARPA funds that are not subject to revenue shortfall. So there's $600 million that are designated for broadband, water development, health response, and those are not in that number either. This is solely discretionary general funds.
Thank you.
Returning to the school foundation program and school capital construction program, the actual amount in excess of the forecast of $69 million, substantially less than the general fund side. Over the next 4 years, we have identified that there continues to be a shortfall in the school foundation program operating account. For this biennium, it has been reduced from $331 million to $243 million, about $90 million better off. After all the adjustments have been made to the funding formula, as well as the improved revenue forecast. We're anticipating continued shortfalls in the next 2 biennium, but those shortfalls will be increasingly smaller. We will release our long-term fiscal profile in the week of November 1st. But to give you a preview of that, we expect to see approximately $100 million shortfall over the next biennium, 23-24 in school foundation program. That's a biennial number, not an annual number. And the following year, we expect it will be around $70 million. So it's substantially smaller than the $4 to $6 million shortfall that was presented to you last year.
Mr. Chairman?
Please.
And so again, same question on that. Does that shortfall include or take into consideration ESSER funds and other direct distributions to education?
Excellent question, Mr. Chairman, members of the committee. No, it does not. So that is all on top of the state support. Importantly, that estimate of $100 million shortfall in the 23-24 biennium also does not include any ECA adjustment, which will be a topic later on your agenda today. If you accept the Joint Education Committee's recommendation of $72 million for the biennium that would be on top of the $100 million, bringing the shortfall to $172 million for the 23-24 biennium. In terms of the Lsra, not only did it benefit from these increased revenues, but the account balance increased by $817 million. That's different than the $850 million. And it did so in a variety of ways. Number one, $515 million of increased general fund revenue under the forecast, and that $250,000 that I talked about of actual revenue. If the JAC and the legislature does not expend those funds, by law, they automatically roll over to the Lsra on June 30th, 2022. So about $500 million from that rollover. Secondly, we exceeded our spending policy of 2.5% into the general fund. As a result, $97 million went to both the Lsra and the SIPA account this year. The Lsra obviously increased because of that. And then subsequently, a deposit a little over $100 million was made to the Permanent Wyoming Mineral Trust Fund Reserve account. No amounts were deposited to the corpus of the PMTF. Next, on the Lsra balance is the Department of Corrections conserved general funds. Again, that will also add to the Lsra balance because it will be a rollover on June 30th, 2022. And finally, the fourth contribution to the Lsra balance is the reduced guarantee on the school side. That went from $331 million to $243 million because less is needed to be guaranteed. That money will be retained in the Lsra, and that's why that balance grows so significantly. Next, I'll move to the components of the estimate. I think it's important for this committee to assess our assumptions and assess the risk that goes into those assumptions. First, I'll speak to the minerals. Oil projection appears on page 5 of the report, table Roman numeral 1. You will see that we had a $20 increase per barrel in the current calendar year 2021. We have increased that price from $40 per barrel to $60 per barrel. Keep in mind that current prices are trading just under $80 per barrel for Wyoming oil, but that's only one day. This is an annual average, which takes into account significantly lower prices in January, February, and the first part of the spring, and balances it out with those higher prices in the fall. If we maintain the general environment around the $70 to $80 per barrel for the next 3 months, this $60 average is easily achievable. There's not much risk here unless oil prices drop below, say, $70. After that, we have increased the price, but done so more moderately. We have increased our price to $60 for next calendar year, and then we've backed it off to $55 for the next 2 calendar years. We have some concern over the long-term oil price and producers' response, not only private producers, but also OPEC plus production, and the volatility of the oil price over time. Keep in mind, when I spoke to you one day less than a year ago, on October 26, 2020, oil was trading at $35.79. As I mentioned today, it's trading at $85. We felt somewhat unconvinced that those prices will be sustained for many years and have used that $55, which seems to us to be a bit more of a long-term average in this market. On the production side, we increased our projection by 15 million barrels in the near term. But as you will see in table 1, we gradually reconcile to the same number we had in the January forecast of 100 million barrels per year by calendar year 2026. Again, there is a start of a theme developing here with oil. Near term, we're experiencing substantial increases, and those have been incorporated into our forecast. In the intermediate to longer term, we are returning much more closely to the prior long-term forecast. For natural gas, which appears on page 7 in table 2, we also increased the price considerably from a $2.80 per MCF to $4.40 per MCF. I mentioned this morning's price is well over $5. And over the past month, Wyoming natural gas has been trading near $6 per MCF. The October 2020 average price at Opal, when I spoke to you 1 year ago, was $2.39. Again, you will see extraordinary volatility, over a 100% gain year over year. When you step back and think about the amount that natural gas is selling for, when natural gas is selling at $6 an MCF, that means that the state of Wyoming and its political subdivisions are enjoying about $1 for every MCF that is sold. Natural gas pays a tax in the form of severance tax, federal royalties, and ad valorem tax of approximately 18%. And even taking into account the natural gas not produced on federal lands, this month, every MCF has been generating $1 for the states and the political subdivisions accounts. On the other hand, 9 out of the last 28 months, Opal was averaging less than $2 per MCF. There is extraordinary volatility in the natural gas market, and we have returned to a $3 average after calendar year 2023 in our forecast.
Go ahead.
So Don, and just out of curiosity, have you looked at the forward delivery contracts on natural gas? And what are you seeing there?
Mr. Chairman, we see elevated prices through the winter months.
Through the winter.
After that, it is returning much more to that $3 average over the next 6 years. So our forecast is in alignment with the forwards curve. On the production side, there is some maybe mild disagreement among Craig. We have experienced 9 out of the last 10 years where natural gas production has been declining year over year. We are reluctant to break that historical trend by saying there, in fact, will be a reversal. Nonetheless, I want to acknowledge that there are some members of the committee who do believe that Wyoming is poised for a reversal on the production side, and there are members who believe that there is a sustained downturn. Maybe we took the easy way out, but we have projected flat production over the next 5 years. I think there is a greater likelihood that we have new oil and gas production from associated natural gas on the eastern side of the state, as opposed to new dry gas production on the western side of the state. In either event, it's unlikely in our current view that the new production will be sufficient to offset the natural decline in those oil producing wells.
Chairman?
Go ahead.
And what was as you went into Craig, what was the rig count in Wyoming?
Mr. Chairman, on the natural gas side, there are 2 rigs. And for a portion of the last year, there have been 0 rigs on the natural gas side. On the oil side, I believe when we met, there were 17, and I think we've added 1 or 2 in the last week.
Go ahead.
Assessment. We're not seeing any new production, but we are seeing a flurry of activity for working rigs in those existing fields. So, which, given the natural decline in that greater Lsra 9%, probably begs more towards the side if we might. I've got several of these well service outfits in my district now, busy right now doing work. 2 drilling new wells.
Mr. Chairman,
Go ahead.
so what, in just ignorance from general ignorance, but what is the price point? Where is the price point where those old rigs become profitable? Do we know that from what we've seen in the past years? As a rise, is it, $55, $65, $70 where we could say that production in Wyoming is going to rise?
Go ahead, Don.
Mr. Chairman, members of the committee, Senator Guru, we did reach out to the oil producers, and what I will say is the production environment is dramatically different than 10 years ago. There are not the large major companies that populated the state. The two larger producing companies are essentially private equity firms who establish their annual calendar year budget, and I would say do their best to adhere to that budget as opposed to modify mid-calendar year. In addition, most of the dry natural gas wells, not the associated oil and gas, but the dry natural gas wells are on federal lands. And Wyoming is becoming a more difficult environment to operate in compared to peer states, particularly the Permian Basin and Appalachian natural gas. So the price point, I would say, was going to have to be not only higher, but sustained at a higher level for a period of time before there is substantial increased interest.
Okay, go ahead.
Mr. Chairman, the next mineral appears on page 8, table 3, and that's coal. Fortunately, Craig's January forecast has proved to be extraordinarily close, both on the price and the production. So there's not much news here. We've modestly increased our production by 5 million tons in anticipation that the second half of the calendar year will generate slightly higher coal production than the first half. That follows historical trends. With respect to the natural gas price, we did increase that by 10 cents. I might comment that that would be a stretch forecast because our average price is about $12 as opposed to $12.35. However, with the recent run-up in natural gas prices, we're seeing a stronger bid and spot market in the Powder River Basin coal. In fact, in the month of October alone, there has been a $1 jump in the PRB coal price. Longer term, you will see a similar downward trend as we had in our January forecast. In fact, we end up 5 million tons lower on the production side. And price is also reduced in the long term, primarily due to the announcement of closure of Wyoming electric generation utility retirements on the western side of the state. Those western facilities receive much higher value coal than PRB coal. And once those facilities shut down, our average price in the state will be negatively impacted. With respect to Trona, which appears on page 9, table 4, we have modestly increased production and lower price, which comes close to offsetting itself in terms of total revenue generated for the state. Total production definitely was lower in the Trona industry as a result of declining world gross domestic product.
Mr. Chairman,
Please, go ahead.
Mr. Chairman, Don, could you speak a bit about the reduction in the federal royalty rate with respect to Trona? What's been the impact of that on the state side?
Mr. Chairman, it does generate, and Mr. Temte can correct me, it does generate a slightly higher amount of severance taxes for that reduced royalty rate because the assessed value ratio for the state is slightly improved. So I believe they received a royalty rate reduction from 4% to 2%, and that will give a very, very minor increase to the state's collection of revenue.
Go ahead.
With respect to sales and use taxes, the actual revenue exceeded our forecast by $41 million or 9%. The first few months of fiscal year 2022, which is July, August, September, continued to exhibit strength, especially in the retail, lodging, and hospitality sectors. We have increased our forecast line but at a slightly reduced slope. So we shifted our forecast up, and then we moderated the slope in the outer years.
Go ahead.
Thank you, Mr. Chairman. So, Mr. Richards, on the retail, what proportion of that was online? Was that a bigger part of the increase than the brick and mortar? Do you have that data?
Mr. Chairman, that is correct. The online sales grew at a much higher percentage rate than brick and mortar sales. However, online sales are still a relatively small percentage, meaning it's a small minority of total sales in the state.
So Don, just to put these increases in perspective to the budget cuts that we did last year. If we had not made those budget cuts, we would still be operating in a deficit. When I'm running through the numbers, if we cut $450 million out of the biennial budget, and over the course of 4 years, we're going to have a $600 million increase. That tells me we'd be wrapping around about a $250 billion decrease or deficit on the general side, but for those budgetary cuts.
Mr. Chairman, in hindsight, I think the revenues are going to be roughly offset by the reductions you took. So the $250,000 of actual increase was the first year of the biennium. In the second year of the biennium, and that's on table A, we're also showing over $200 million. So when you combine both of those for the biennium, it is comparable. As a sidelight, there were a couple of states, and I believe Wisconsin was one of those, who did not revise their equivalent Craig revenue forecast during the coronavirus. Now, granted, they have an economy that is dramatically different than the states of Wyoming. And in fact, when they look back over the past 18 months, their revenues are essentially in line with their 2019 revenue forecast. Our total revenues are still below the revenue forecast, and we can tell that because there were some tips put in if we exceeded our Craig revenue forecast of 2019, and they were not tripped for fiscal year 21. They may be in fiscal year 22, but they weren't in 21. I would go a step further and say that in calendar year 2020, which kind of is a bridge between two fiscal years, but in calendar year 2020, the state of Wyoming did experience a dramatic reduction in revenue. And that's how we come to our $503 million revenue shortfall under the federal formula. So there's no doubt that we had several $100 million reduction to total state available revenue. Looking forward, particularly benefiting from oil and gas prices, the near term looks very strong in terms of revenue collection.
Go ahead.
I would add one other caveat to that. If you recall, we funded major maintenance with SIPA last year to mitigate the overall impact that we had to do for budget reductions. Currently in the SBC, the major maintenance is 2.56% or $185 million. So right out of the gate, we have to overcome that $185 million on major maintenance.
Mr. Chairman, members of the committee, turning to investment income, our pooled income, which is that state agency pool and now the Lsra, generate investment income in the form of interest, dividends, and capital gains for the general fund. We increased our estimate modestly in the near term by $3 million, rising to about $41 million in fiscal year 2026. The reason for this is twofold. Number one, we have modestly higher yield environment. And number two, we have higher investable balances. We have higher cash in our accounts than previously forecast. Recall that the investment income off of the ARP funds, that $1.68 billion as it comes to the state, unlike the CARES Act funds, can be retained by the state in the general fund. This committee has looked at that in both July and September. On the permanent fund side, Craig continues to not project capital gains, but there are two issues worth noting. First of all, the spending policy was met or exceeded on both sides, both the PMTF side as well as the Common School Permanent Land Fund side. There were deposits of $101.9 million into the PMTF reserve account, and there was a deposit of $36 million into the Common School Permanent Land Fund reserve account, of which another 16.6 was tipped over into the corpus of the Common School Permanent Land Fund. So you might ask yourself, why did we hit that threshold on the common school side, but we didn't hit that same threshold to dump money into the corpus on the PMTF side? And you'll recall that there was a large one-time deposit of the School Foundation Program reserve account. You essentially wiped that account out and put it into the reserve account on the school side. So that's why that's outperforming the PMTF side. And second, because we have higher balances, that also increases the spending policies, just really as it was designed, because it's 5% of the 5-year market average. This year's market average is pretty extraordinary. We have unrealized gains in there, which pulled up that 5-year average. As a result, along with the higher forecast yields, interest and dividends only, we now project that the out years for K-12, there will always be sufficient funds in the reserve account to fund that guaranteed 5% on the school side. And we always show that the guarantee on the general fund will be met at 2.5%. And all but the last year, 2026, we run out of money to guarantee the SIPA, assuming no capital gains going forward. So that changes the overall theme for our long-term forecast pretty dramatically. Two more items worth mentioning. On assessed valuation, I've spoke to the mineral side of that. About half of the assessed valuation comes from non-mineral properties, agriculture, residential, commercial, industrial properties. They averaged 5.1% increase in calendar year 2020. We have increased our forecast to 4.5% for calendar year 2021. This is to recognize the robust residential housing market in terms of valuations. We've reduced that to 3.5% for calendar year 2022, and then 3% thereafter. 3% is the average long-term amount. In fact, it's about 3.5 to 3.8%. However, Craig has always been maybe overly conservative in this area and increased it only by 2% historically. So even increasing that by 1% more will have a substantial positive impact entirely on the School Foundation Program side. The overall theme of this report, as well as the long-term profile, which will be released in a week, we expect continued, although smaller, shortfalls on the K-12 side, even without an ECA, and near-term substantial surpluses on the general fund budget reserve account side. We have also fully funded the SIPA, the Lsra. We have a stronger balance sheet going forward. With that, Mr. Chairman, I turn your attention to Appendix A, which appears on page 29. You'll recall in the May 2020 and October 2020 Craig reports, at the request of this committee, we added highs and lows. Unfortunately, our methodology left some skepticism and maybe even wanting in that methodology. We prepared those just like we prepared our expected value forecast or the base forecast, and we did so from the bottom up, identifying a high price and a high production value, and then combining those into a high amount. We've recognized that's not always the case. A great example of that is natural gas. We have high prices, but the production didn't change essentially at all. So adding those two together did not provide a quality result. In fact, there are several shortcomings of our prior attempt. It did illustrate uncertainty and volatility, but it was not reproducible. It was not systematically prepared, and it was not consistent between the various numbers. It contextualized our uncertainty and it illustrated our revenue volatility. But as one of the creators of these ranges, it was difficult even for me to describe with any precision what it was actually measuring. As a result, it was also very time consuming for both Craig as well as our staff. So we've reevaluated this approach in the fall, and we've replaced it with an alternative method that demonstrates the uncertainty, illustrates the volatility, and does so hopefully with a better visualization, more standardization, and reproducibility. Specifically, we have looked at the four main revenue streams: sales and use taxes, severance taxes, FMRs, and ad valorem taxes. And we have taken a standard deviation or prediction interval around each of those, using not the opinions of Craig members, but using 40 years of actual history. Then we changed that standard deviation for each estimate interval. And I think the footnote number 2 at the bottom of the page on 29 illustrates that math formula for those interested. But in short, we used a drift to look at a 1 standard deviation amount of the potential change in revenue going forward. Now, 1 standard deviation, to put that into perspective, is about 2 out of every 3 years we would fall within that range. 2 standard deviations would be, 95 out of 100, and 3 standard deviations would be the 100-year flood. But when we widen it out to 2 standard deviations, while that might be more likely to capture the full range of effects, it's really so wide that it doesn't provide much meaningful information to policymakers. So we elected, at least on this effort, and we're certainly welcome feedback on our methodology here.
Mr. Chairman, so if I understand that, if you go to figure A1, so you got the divergence, you got the dotted line is the expected value, which is, and back to what you said, that then we're 1 standard deviation high. So what that tells us, we've got basically a 50% somewhere between the 2.
That's correct, Mr. Chairman. And you can see the shaded area at the bottom of A1 is our high-low interval from last October. And you can see a number of shortcomings with that. Number 1, it was too narrow. Number 2, we've already missed it. So that is not a it's not a ideal methodology. But we wanted to show our work and demonstrate our newer methodology. And I think these graphics kind of visually describe the likelihood. It also allows you to look back over the last 10 years and see the trends on these lines. FMRs, for example, dropping from $900 million to the current $500 million provides a visual impact. One last comment I'd like to make on figure A4, and that's the assessed valuation. And you will see that there's very little, even in the 1 standard deviation low figure, there's very little decline there. And the reason for that really is how many years can you recall where not only you, but all of your neighbors received a reduced property tax? It happens, but it happens pretty infrequently. And so there's a very strong base on ad valorem taxes that are unlikely to be breached. Not impossible, but unlikely.
Go ahead.
What was the period that you used to calculate the standard deviation? Was it from 2011 to generate that? And how did that fit within the 40-year forecast as far as volatility? If you take a short period that's very volatile, you're going to have a larger standard deviation than it would take a long term where it has spread that out over 40 data points instead of 10. So what was the period that you used to calculate?
Mr. Chairman, Senator Hicks, excellent question. We used, I believe, 42 years. We went back to 1980. We only included 10 in the graphic.
Okay.
but the calculation included 42.
And Mr. Chairman, just to follow up, so when we look at the assessed valuation, you talk about, that's going to show up when we look at the common school permanent land fund, or for the school funding. It'll show up in those 12 mills that are assessed for school. Was that used in your projection for the $100 million deficit for school funding, that increase of 5% this year, which I think is very conservative? So was that brought forward to recognize that increase in assessed valuation and the impact on the school funding deficit?
Mr. Chairman, Senator Hicks, yes, it was. The challenge with K-12, why I talk about the 100 million, because if I talk about the revenue impact, I'm only really capturing the 12 mills, which isn't. I also want to capture the local 31 mills because that's incorporated in our formula. Both sides of that are included in this
Okay.
ad valorem tax.
In the forecast.
Correct.
All right, thank you.
Mr. Chairman, just to conclude my comments or wrap up here, there are risks associated with our forecast, and I wanted to point those out to you. Sales and use tax collections, it's not whether or not retail consumption, including purchases of automobiles due to lack of supply or tourism, is sustainable at these most recent levels. We've spoken about the volatility of both oil and natural gas. And this has a significant risk going forward with any Craig estimate. The non-mineral property taxes, we have become somewhat more aggressive with our forecast in terms of future increases. Coal production, it's possible that could decline more precipitously than we have anticipated. On the other hand, I think there is an equal amount of criticism that our near-term oil and gas prices may be too conservative. So there are risks to both the high side and the low side. This forecast is a consensus product. It is our best approach, and it is the work of a group. A couple other comments, not necessarily directly related to Craig, but the implications thereof. And that is 2021 Senate File 60, which this committee has looked at quite a bit. That's the monthly payment of ad valorem taxes. JAC has received some updates on the progression of that implementation, and there are some practical takeaways from that legislation as well. You will experience substantially more volatility on the K-12 school foundation program side. We are moving away from known revenue estimates on ad valorem taxes to 71 mini Craigs spread throughout the state who are now independently forecasting their oil and natural gas prices for their school districts and counties, populating that into the model, which our now profile reflects. These are no longer Craig projections. These are school district predictions of oil and gas prices for next calendar year. Now, we have compared their predictions against what Craig came up with, and it's not that far off. We also looked at that to see whether or not there's any incentive one way or the other to overestimate or underestimate, and there really isn't any. Nevertheless, LSO staff will be meeting with the Department of Education staff on some of the methodologies that local school districts are using. For example, the non-mineral property was not changed. That should not be an estimate. We know what that is as long as people pay their property taxes. And even if they don't pay their property taxes, there's a process by which others on the steps of the courthouse can pay those property taxes. So that should still be a known. There are some school districts out there that are estimating that. And we believe that they could prove that by just using the knowns. Not only that, in many cases, we have, well, in a couple of cases, we have counties making individual decisions of which producers to provide on the old system as opposed to which producers will be paying ad valorem taxes under the new system. Unfortunately, Craig does a statewide estimate, not a company by company estimate. That adds complexity, and it also adds the potential for error. We have incorporated those companies that are paying on the delayed basis, 18-month delayed basis, versus those that are going to be paying monthly. But there certainly could be some incongruence there. However, we intend to continue to monitor and raise some of those issues with our partners in the Wyoming County Commissioners Association, and we have committed to sharing our detailed data with the association so that it can be shared with their members. Finally, also a non-Craig issue, but something of significant substance to this committee is the one of the most impactful fiscal policies, while you are aware, way over the summer, since the legislature has adjourned, is the governor's use of ARP Act dollars in the Department of Corrections, conserving general fund dollars. I can't overstate the magnitude of flexibility that this affords the legislature and the governor going forward. Those conserved general funds become discretionary general funds. And as an ancillary impact, it also allows the state of Wyoming to have substantially more flexibility under both the higher education maintenance of effort and the K-12 maintenance of effort, since the federal funds supporting the Department of Corrections for these years are not included in that maintenance of effort calculation. So there were two benefits from the use of that, and I should make that point to the committee. With that, Mr. Chairman, I'd stand for any questions.
Questions for Don? Representative Stiff.
Mr. Chairman. Mr. Richards, thank you so much for that. That was just a great presentation. I feel like when you speak, I sort of get the big picture and understand what's going on. Are there any structural forces going on with respect to sales and use taxes going forward across the state that will impact different regions of the state differently? I think of my own county, Sweetwater County, when natural gas prices were this high 15 years ago, sales tax revenue was really high, whereas now sales tax in my county is flat, right? And so I wonder if that's, and I'm just trying to understand this and the issue that impacts this committee would be when we decide both on the level of local distributions that the state legislature should support, as well as how that pie gets carved up across the state. So if you have any thoughts about that, I'd appreciate that.
Mr. Chairman, Representative Stith, the variability across counties and regions of the state has been in the collection of sales and use taxes during the COVID pandemic has been pretty remarkable. First of all, those counties that rely most heavily on energy extraction, fossil fuels, are by far impacted the most on their sales and use taxes, and arguably have not really recovered from that. Perhaps we're starting to with some increased rig counts this month, edging towards some resumption of the minerals contributing. The first thing that happened, in my opinion, is last year, just almost coincidentally, calendar year 2020, there was a tremendous amount of development in the wind industry, particularly along the I-80 or southern tier. So those counties primarily were the beneficiary, plus Converse County, with some wind development there. It happened to coincide with a downturn in retail sales. More recently, in calendar year 2021, those counties that benefit largely from tourism, leisure and hospitality, specifically Teton County as the leader, Park County, Lincoln County, enjoyed much stronger revenues than the balance of the state when it came to sales and use taxes. And then finally, I would comment that up through September or so, communities with somewhat more diverse industries, Cheyenne, Sheridan, performed better in terms of their sales and use tax collections. That's starting to roll towards the mineral impacted counties, towards Converse and Sublette, Sweetwater, but those mineral counties are still lagging.
Other questions?
Mr. Chairman,
Senator Steinmetz. 1 second.
Thank you, Mr. Chairman. Don, I was wondering about the mini Craigs because that sounded really interesting to me and kind of perked my ears, especially when we have just been told how much experience it takes to produce the report at the state level and all the experience you guys have and even honing some of the reports that you give us. Do you see that as being problematic going forward to have school districts doing this without the expertise of your group? I know you can assist them, but is this a recipe for trouble in the future? Thank you.
Mr. Chairman, Senator Steinmetz, first of all, I think it was a significant endeavor and lift for those school districts and counties shifting to this. I think the results so far have been promising, that in many cases, counties, Lincoln County, Sublette County, Converse County, know the development and the lines as to where development is going to occur better than we do in Cheyenne. So there are definitely some benefits of local knowledge in this process. On the other hand, when a fiscal officer at a school district took that job, I don't think they ever anticipated that they would have to make projections as to commodity prices in their district. I think we're going to be improving this process by facilitating the delivery of data from both the State Board of Equalization and the Department of Revenue, as well as Craig. And I'm hopeful that it will work out in a positive manner, and it's certainly leading towards a positive outcome. I will have this one comment, and that is, under the current scheme, regardless of school districts or whether Craig did it, there will come a time when we need an effective immediate appropriation due to lower energy prices. School districts have to make their budgets in, say, June, and they've had to predict the total mineral revenue, whether they did it from the ground up or just plugged in last year's. And I'm sure there's a whole variety of methods that they used. There will be a time when prices are dramatically different than the year prior. And when they're higher, no harm, no foul. But when they're lower, they will recognize that our budget, their budget they've adopted, is not accurate. And there will likely be a need for a school foundation supplement at that time.
Go ahead.
Mr. Chairman, I have a question for Mr. Hibbard and then also one for Mr. Richards. Mr. Hibbard, last year during the department budget cuts, we saw significant cuts in the Department of Corrections. We were very impressed with how deep they were able to cut. So the governor pulling from the ARPA funds, is that a result of the Department of Corrections maybe cutting too much, way more than what they could possibly sustain?
Mr. Chairman, I believe that the Department of Corrections will be able to sustain their reductions. But you have to understand that there's consequences to that lift. The Department of Corrections has some exception requests that we presented to you in November 15th to try to mitigate what the need is for the Department of Corrections that is coming towards you. But I also know that with regard to the Department of Corrections budget, regardless of ARPA, we have experienced about $6 million worth of overtime overruns because of the COVID environment, how it's impacted the Department of Corrections. So there is ongoing struggles with the Department of Corrections that are caused by battling COVID. So hopefully that helps.
Thank you, Mr. Chairman. For Mr. Richards, Don, this maintenance of effort thing is a big deal. It's significantly going to affect our upcoming legislative budget and session, how we allocate funds. So my question for you is, would you, for the benefit of everyone, talk a little bit more about what this maintenance of effort thing really is and how it's going to affect and how the Department of Corrections adjustment is playing into?
Mr. Chairman, Representative Simpson, as a condition of accepting the ESSER 3 funds or the ARP ESSER funds, the state is bound by maintenance of effort for higher education, that is the University of Wyoming and community colleges combined, as well as K-12. And the general expectation is that the higher ed or K-12 must be treated the same as all other state agencies. Therefore, if you cut state agencies, you don't have to, you can reduce higher ed and K-12. But if you add to state agencies, you need to also treat higher ed and K-12 similarly by adding to them. So in some other states, what I have seen is they literally had screens like you have, where they would calculate the add-on to an increase. For example, if there was a desire to add $10 million to your favorite program, and it's a state government program, say Department of Parks, K-12 would need to be treated proportionally, which means they would need about a 45% or $4.5 million increase associated with that $10 million increase. And then secondly, higher ed would need to be treated proportionally, which was about $2 million or 20% of that $10 million increase. So everyone has to be treated the same, particularly for this fiscal year and fiscal year 23. Well, by the replacement of general funds using ARP money, the governor has reduced general funds, giving the state a gap to increase those for other purposes that it will not be subject to the maintenance of effort requirement for higher education and K-12. So by the use of those ARP funds, there's a lot more flexibility that this committee has and your colleagues have on the floor before we need to start using that formula. There may come a time where the budgets have increased so much that now we no longer have the benefit of those ARPA dollars that have been supporting the Department of Corrections, but we'll constantly be needing to ensure that the higher ed and K-12 are treated proportionally or equally.
Thank you, Mr. Chairman. I think that's really, really a very important point, so I appreciate your elaborating.
Mr. Chairman, can I add to that? Recently, we've had the conversation that we had the FY22, which we've already converted to $121 million. We have corrections, standard budget reduced in the same fashion for 23-24, added another $256 million. That gives us that buffer. The proposal that I presented to the Joint Appropriations Committee this summer to use YDOT's federal mineral royalties as the rest of that $502 million revenue conservation. We don't enjoy that conversation that Mr. Richards just pointed out with those federal mineral royalties because it doesn't represent a reduction in general funds. So we worked with the Department of Health and they are on task to find us $144 million in their budget of pure general fund money. So we can add to this. So we get the benefit of the full $502 million revenue assistance and the full benefit of the general fund budget reduction to pad us against the MOE if we start adding money back from the one-time funds that we have or the ongoing funds that we have. So we are maximizing that through the Department of Health now rather than YDOT, but we will use YDOT as a cleanup methodology because you may have an underrun in corrections or you may have an underrun in the biennium 23-24 in the Department of Health. So if we have nomenclature in there to use YDOT's federal mineral royalties for what's missing, then we can get the 100% of the 502 million. So we'll keep YDOT in the loop, but we will focus on corrections in the Department of Health for the $502 million revenue assistance.
Will we see that in the governor's budget recommendation?
Yes, you will. In fact, shortly when we get the math done, we will be updating the Chapter 17. The Chapter 17 report that she already has corrections, reduction in and the standard budget. When we get this updated with Department of Health, you will see that reflected in the Chapter 17 here shortly.
Thank you, Mr. Chairman. And so kind of along the same lines, and both for you, Mr. Hibbert, or Dawn for you, however, because I wanted to reach out on that a little bit on the Department of Health, because we had that maintenance of effort because of the enhanced Medicaid numbers there. And so are we going, do we need to be paying attention with that maintenance of effort and how that ties into this other maintenance of effort on the overall, if there's some connection there between the two, or if we just are basing those Department of Health, those community and home-based service programs for on that maintenance of effort level. And then Kevin, on that Department of Health, are you looking at being able to capture some of the revisions because of that enhanced Medicaid dollars? Is that really where we're looking for that money to come into that you're asking the Department of Health to come to? Because there should be significant reversions come back. Is that where you're seeing that come from?
Mr. Chairman, recently we had the hearing with the Department of Health, and specifically in that hearing, I requested the Department of Health provide us the statistics, the estimate of the reversions, because that's what there'll be reversions due to the FMAP. As far as the conversation that we just had about maximizing the conservation of general funds, certainly on the Department of Health side, the focus will be clean and clear general funds. So that won't impact, we won't be having any federal entanglements that we'd have to address in order to be able to use those for the conservation of general funds. Similar to corrections, that's why we picked corrections in the beginning, because they have like $40,000 worth of federal funds. So it wasn't a big challenge. As far as the rest of it concerned is, yes, we have our eyes on all the maintenance of effort requirements and needs that we have to pull through, including some unique appropriations in the Department of Health for that use or could use school foundation program dollars. So I would say, yes, we're actively looking at all of those.
Follow up, Mr. Chairman. Coming back to your point on the strictly general funds, but I would assume that the significant portion of those would become from the reversions of state general funds that had been attributed to Medicaid because of that enhanced rate. Is that a correct or incorrect assumption?
At this point in time, the answer is we will be pulling down the Department of Health's standard budget like we did with corrections. So that is existing general funds appropriations that we're going to use for revenues. This is not the FMAP calculation. Like I said, we have asked the Department of Health to provide us the statistics on the anticipated reversions due to the FMAP.
Thank you. That helps.
Okay, any further questions for Don or Kevin?
Mr. Chairman, just a couple of house cleaning items, if I may have.
Please.
In 2019, if you recall, we presented the budget from the governor with the one-time money and the ongoing. Particularly after this conversation today, there's a significant amount of one-time money that we will not enjoy in 25, 26. So we'll be looking at the same delineation of this is a one-time revenue source. We're going to use one-time recommendations for funding. And then the ongoing, this is an ongoing revenue source, and we'll be making those on the recommendations of the standard budgets. I talked about the fact that the major maintenance will be the first thing. We're going to change that from SIPA back up to the general fund category. Volatility, I think everybody understands that that's the environment that we live in here in Wyoming. It can't be understated. Conservation of the revenue, Department of Health, we just discussed. And then lastly, I would like to thank Dr. Wendell Liu and his team at Economic Analysis for their assistance on Craig as well.
So Don, just going through the various funds and the reserve accounts, it looks to me we have over $1 billion sitting around in various reserve accounts. And those dollars are basically not invested in fairly aggressive investments. And it just continues to, as we kind of walk down this road on how we can improve our overall returns, it looks like that we have an opportunity to, to do other things with those dollars if we can kind of restructure how we modify, how we run our reserve accounts. Any thoughts on that?
Mr. Chairman, I think the actions that the legislature has taken over the last few years have been positive. For example, allowing the Legislative Stabilization Reserve Account, LSRA, to be invested in equities. You reaped the benefits of that in this report. They did invest in equities in fiscal year 21. They did realize a sizable amount of realized capital gains, and is the primary reason why our pooled income column on table 1 exceeded our estimate. So it does work when the markets are going up. However, to your point, when you flip to page 5 of the report, that's the PMTF reserve account and the common school reserve account. And combined, that's well over $500 million. I don't know if it was this committee or Cap Finance ran a bill that was adopted that allows those funds to also be invested in equities. None of them have been to date. They're all being invested in short-term state agency pool investments. I think the State Treasurer's Office and others have some concern as to when these funds can be called upon, and the difficulty in establishing a reliable expectation of what the legislature will do, as well as what the cash flow demands are on these accounts, complicate the challenges in STO. But that speaks to your point. You've got $500 million there that's invested in very low yield.
Go ahead.
Mr. Chairman, did Craig, did you all have any discussion about about inflation rate? Was there any discussion about that, and did you make any projection or estimate or recognition of inflation and where you see that at now and potentially in the future?
Yes, I believe we did in several different areas. So we certainly had a discussion of inflation when it came to the non-mineral assessed valuation. We also did so on sales and use tax. In both cases, that inflation is a burden on consumers or taxpayers, but is a benefit to the state. As prices of goods rise, the sales tax naturally rises. The larger, and we also looked, because our regression model that forecasts sales and use taxes looks at personal income as well. So there is a inflationary component built into the model on the income side as well. I think the larger point on inflation is potentially on the expenditure side, and if that has any demands on the delivery of government services.
And Mr. Chairman, quick follow-up on that. I appreciate that. It also, did it have any effect on your estimate of income with respect to dividends and interest, with respect to a determination of a real interest rate as opposed to a nominal rate?
Mr. Chairman, excellent point on that as well. We did look at increasing yields on the 10-year bond and incorporated that into our investment projection. All of these are not net of inflation. So our investment income is inclusive of an inflation component.
Okay, and so Mr. Chairman, and I was just wondering that when I saw that you had increased the yields, I was wondering if that was most of that factor was mostly because it took into account inflation and its effect on interest. Okay, thank you.
Mr. Chairman,
Go ahead.
just to follow up on that, Don, while it increases our revenues, did we ever look to see what the increased expenditures associated with inflation? So let's look at something like energy costs for K-12 for the block program, or material costs. Is it a net gain or a net loss, or is this just something that we can't forecast associated with the inflation cost? We pay that inflation cost for this goods and services, government, raw materials in the case of energy costs. So do we know that it's a net gain, or is there any?
Mr. Chairman, we have looked, I think, at a limited amount on that. When it comes to energy prices, it is an absolute net gain for the state of Wyoming. But that's a different calculation when it comes to general inflation of goods and services, wages, prices at the hardware store, that sort of thing. I can't speak to that. I don't know if Kevin has any comment on that, but in terms of utilities and energy, and I know when A&I will present their utilities budget, I have no idea if they're asking for an exception request. It's possible. Compared to what we will enjoy on the revenue side, it will overwhelm the expenditure on utilities.
And Mr. Chairman, that makes sense on the energy side. Do we just have any idea on that net, on the big picture?
We
You
would
know,
have-
and I'm sure it's gonna come up when we have a discussion with A&I as far as salaries, while that's being driven by inflation. Cost of government, number one cost of government's employees. So I still wonder whether we're really gaining in the big picture if we get into a 5 or 6% increase in interest or inflation. Kevin?
Mr. Chairman, yes, that will be in the compensation conversation and also the A&I conversation on utilities. But if you go farther than that, there's special revenue agencies out there that'll be impacted by that, the game and fish and their fleet, Department of Transportation, the operations of their fleet, and asphalt prices, certainly. I mean, I think those are the other places that are largely going to be impacted by the inflationary pressures.
So Don, just to kind of put all this into perspective in terms of your forecast, and to talk a little bit more, Kevin, about how we deal with this good news of having some surplus dollars, but with the understanding that with 4 years from now, we're going to be essentially in the same boat that we were a year ago in terms of overall revenues, or not, close to it. And so, you know, and because of the volatility of our revenues, it's, you know, the concept is if we don't save for a rainy day, then it's, we're going to fall off another fiscal cliff in 4 or 5 years from now if we don't use this money wisely to shore up and prepare ourselves for that fiscal volatility.
Mr. Chairman, that is spot on. And throughout the conversations, the hearings that we've had thus far with the agencies, they're a little bit surprised when we bring up the fact that we are going to be controlling the standard budget increases, the ongoing costs of state governments, because we have our eyes on 25, 26, predicated off the Craig with no capital gains. That's where we have to keep our eyes on the ball. We had that eye on the ball for 23, 24 back in 2019 as well. So you will see a delineation of the governor's approved standard budget changes controlled by the future, and then the one-time money used where it's going to benefit the citizenry of the state of Wyoming. That's important for us. That is spot on. We have to make sure that we keep our eyes on the ball, and that would be 25, 26 standards budget.
Well, and I kind of like your attachments on page 30, 31, where we have that, where you give a variability of ups and downs, because I don't think anyone in the professional investment side of the world believes that we're not going to have some type of a corrective moment between now and that period, which means we wouldn't be on the lower end of those forecasts if and when that happens.
Mr. Chairman, this is all being taken into consideration. I can't provide statistics today because the governor hasn't gone through his budget process. That'll be released on November 15th. And then you'll see the impact of the Lsra, you'll see the impact of the SIPA and the SCCA and all the other funds, including what transpires with the one-time and ongoing funds, the general funds. But rest assured that the governor is, and we are looking at 25, 26 as a control when we're making decisions on what goes into a standard budget.
Okay, any further questions? Thank you, Don. Thank you, Kevin. We appreciate it. We're right on time, it looks like. 9:30 is Public Works contracts. You ready to jump into it? You want to take a quick break? All right, let's go.
Could you just got a text from people listening that they can't hear? We need to talk in front of
So please use your microphones because we're running live. So if you sit far back or you mumble like I do, they don't understand.
I'm sorry, did you say something?
Yeah.
We ready, Mr. Chairman?
Please proceed.
So members of the committee, we talked about, we'll be using 22 LSO draft or 22 LSO 0149 draft 0.7 we had, and this is the bill that Representative Stith, Representative Simpson, and I have been working on with contractors and agencies, Department of Construction particularly, and Department of Transportation, in trying to work through some of the challenges that we have in bidding, notifying bidders, and accepting bids. And so, if I may, Mr. Chairman, I think the meat of the bill is if we could get everybody to turn to page 5. After you find the bill, Mr. Chairman. Here you go, doing that one. Here you go, Drew. I'll slow down. Does everybody have the bill?
Draft 7, is that right?
Vote aye.
Okay, go ahead.
Thank
Everyone
you,
got it?
Thank you, Mr. Chairman, and I apologize for getting in such a rush. If you turn to page 5, that's really the essence of the bill, and then we'll go back and talk about all the places that we insert reference to this. But we're saying that a public entity, that's any public entity that rejects a bid response for public works contractor, denies a bidder or respondent the opportunity to submit a bid or respond to solicitation for public works contract shall provide the bidder or respondent a written response. So in essence, what we're saying there is if somebody requests to bid on a project and they're not allowed to, they have to be notified as to why. If there is somebody, if there's in the bidding process, when somebody submits a bid, if any or all of those bids are rejected, maybe because money or an addendum or whatever the case may be, they also have to notify why the bid was rejected and the condition behind that, describing that. And then we put in there that the written response provided under this section shall not constitute an action by an agency that is subject to the Administrative Procedure Act. And then, Mr. Chairman, we go back, if you would join me as we walk through the bill, starting on page 2. We go into the capital construction section and make reference to that new language. That 15.1.113 is cities and towns. So those contracts there will make reference to it. If you switch over to page 4, that reference to 15.6.302 is local improvements for cities and towns. Page 5 of the top 16.6.119 is the public works and contracts, which the new language, that's where it will be housed. Page 6, the 21.3.110 is school districts. On page 7, the 24.1.132 is cities and towns again for bridge and bridge works exceptions. Page 8, 24.2.108 are highways, roads and bridge constructions. Those there. Then if you'll go to page 11, we start getting into some of the districts at the top, the 35.2.429 are hospital districts, 35.2.715 are hospitals and care facilities when they're doing bids. Page 12, 35.3.107 are sanitary improvement districts. 37.7.128 are power districts. Page 13, we put the new language in 41.7.4.12, which is irrigation districts. And on the next page, page 14, 41.9 is drainage districts. Page 15 is 41.10, the water and sewer districts. And that is the areas in statute that needed where this new language would need to be implemented. So with that, Mr. Chairman, we'd be happy to answer any questions. There are, maybe before we get to that, there was, we've had the contractors come back and say, well, we didn't specify a time frame when that response had to be made. We've got an amendment ready that will say within 10 business days. And then I think in some conversation with Chairman Perkins, he had indicated at one time that to look at a situation if we allow in the public bidding process that it doesn't necessarily go to the low bidder. So in a situation where you have an apparent low bidder, but then the public entity awards the bid to somebody else, in an amendment, we have the language that would require them to inform the apparent low bidder why they weren't selected. Similar. So if we move the bill, but happy to answer any questions that members might have.
So what's the ramification if they don't do it within 10 days?
They go to jail forever and can't have cookies. We didn't put a penalty in if they don't comply. We contemplated that, but felt that this would be the first step. Feel pretty comfortable that that the municipalities and everybody will, and if not, we can come back and make it a little harsher, Mr. Chairman.
Representative.
Mr. Chairman, I'd like to thank Representative Larson and Simpson and Ms. Ravalli in particular for really putting a lot of effort into getting the details right on this bill. I think this bill is a real step forward. There is a somewhat of an interesting quirk about there not being a clear remedy for a violation. It does state that there's no administrative review and it's not considered state action for that purpose. What's left ambiguous is whether it's state action for any other purpose. So for example, going to district court. So that's sort of just a constructive, that ambiguity exists in current law and we didn't really address that. So put a question mark there. As a practical matter, whenever this issue has arisen for my clients and they want to go to district court, I just tell them, well, forget that, because by the time district court gets around to hearing this, the project will be finished. So I think this is a real step forward, and I also like the amendment, the 10-day requirement. This proposed amendment makes a lot of sense to me too.
Go ahead.
Mr. Chairman, thank you, Mr. Chairman. Just following up on Representative Stiss' comments, and certainly we have lots of instances where we require certain things to be done and don't impose a penalty or an effect if it's not. But I guess the other thing I would have is so when we get down to this, and so on at bottom of page 5 and the top of page 6, we take away any administrative remedy that they have. And obviously you can kind of see this in both directions. It's easy to see why you do that. But ultimately, what's the remedy for a contractor who, when they get that and they feel that the description of the qualifications or responsibilities of the bidder that were non-responsive, and so that's why they were not selected, when they think that that's false?
So our intent was, as we thought this through, we thought that the most remedial or rudimentary way would be then that the contractor would come back before the presiding authority, be the town council, be the school board, be the whomever, and say, I've been dealt unjustly here, and the my rejection here isn't valid, in allow them to reconsider or correct the mistake that their department has made. If it's not satisfactory there, it appears to us, appears to me, that then the contractor certainly can hire some legal representation and take that through the system and try to make his claim and damages made there.
Further questions? So do we have any?
Chairman, and I don't know that that's the right, I don't know, still working on this, but this is really a step forward. At least at this point now, the contractor knows or has something more concrete. And so I guess the question we'll have is, as the bill continues to go forward, is, so what do they get to do with that information once they have it? And so, but anyway, this is, no, I appreciate the work. It's, this is, I think this is a great step forward. It's moved in the right direction.
So do we have any public comment on the current draft or amendments? Come on up, Katie. Welcome.
Good morning. Good morning, Chairman and members of the committee. I'm Katie Legursky with Associated General Contractors of Wyoming, and we would agree with bringing this bill forward. It is a step in the right direction. We are very hopeful that by knowing why our bids are being rejected or a contractor is not allowed to bid on a project will give us some additional information to go back to the public entity and explain why we do believe the contractor should be allowed to bid on that. We are very fortunate that a majority of our membership right now works with the Wyoming Department of Transportation. We know before the award of a bid, we know immediately if they plan on rejecting a bid. They always give us the opportunity to come speak before the commission to provide the viewpoint from the contractors before they make a formal decision. Unfortunately, we do not have that on the commercial side of public entities, but this is a step in the right direction and we do support it. We also would support the amendments of adding a timeline on the 10 days. That actually did come from my organization because we do believe a time frame is necessary. And we would also support the amendment to add in, if the apparent low bidder is not awarded, we have the reasons why that contractor was not awarded that bid as well. And with that, I'd stand for any questions.
Questions for Katie? Okay, thank you, Katie.
Thank you.
Anybody else? Welcome, Jeremiah.
Good morning, Mr. Chairman, members of the committee. I'm Jeremiah Raymond here on behalf of the Wyoming County Commissioners Association. I do appreciate all of the working group that has brought forward a much better piece of legislation, and not one that I think my members would be opposed to. I think the one thing that I'll just mention that I'm still trying to wrap my mind around is whether the response should be predicated on the contractor actually requesting that. What I'm trying to avoid there in that thinking is that we've produced unnecessary work for the various governments. That said, do you think that response is appropriate for these companies relative to the contracts that local governments are awarding?
So theoretically, they already have done that work when they reviewed the contracts and opened them. They just got to put it down in writing.
Yeah, Mr. Chairman, it certainly is, the process of then writing that response. And in my own head, do I think that we're going to have a number of sort of pre-written responses in a lot of instances for specific cases? It's going to be that odd case that might take a lot more time as we work through the process. So again, I'm not here to say that I want to see that quite yet, but I'm trying to work through my head if we're okay with where this stands without that provision.
Go ahead.
And it, as you do that, and I get what you're saying. I'm thinking, and I just in my anecdotal experience, most time it seems like Not always, but it also depends on the economic times. But a lot of times, you know, the most you're getting on a lot of jobs, 2 to 3 bids. Sometimes you get more, but a lot of jobs, there's not that many bids on them. I mean, did you have any feedback from your members that indicate that that's not, you know, that it gets to be of how cumbersome or how burdensome that would be if, you know, it seems to me like if you get 15 or 20 and you just have to send that out, that's one thing. But if it's only 2 or 3, I'm just wondering how I'm just like you, I'm trying to wrap my mind around how that all works.
Yeah, Mr. Chairman, and I think we talked about this a great deal in the working group that, you know, my members in particular are looking for more people, more contractors to apply for the work that they have, particularly in a lot of our rural communities, but it happens in much of the larger counties. So yeah, I'm not here to suggest it's going to be a tremendous burden, but you know, trying to avoid unnecessary work if it's appropriate.
Okay, any other questions for Jeremiah? Appreciate your comments. Anyone else would like to comment? Come on up. How's it going, Bob?
Mr. Chairman, good morning. Bob McLaurin with WHAM. We too support the bill. We think it's a much improved piece of legislation, and we're also in agreement with the proposed amendment. So thank you for your consideration.
Yeah, it's too bad we won't have this kind of work on the next 20 bills that we're going to see this week. Okay, appreciate it, Bob. Further comments? Further comments? Is there any online comments? Okay. All right, we will close public comment. Do we have any actions on this bill?
Second.
Moved and seconded. Any amendments to the bill?
Mr. Chairman, if I may, committee members, we, in anticipation of the amendments, Tamara has drafted a draft amendment that I think you have in front of you that would go to page 5, line 17, and insert the time within 10 business days of the rejection or denial. And then on page 5, line 22, after deficient is where we talk about making a response if the person was not the apparent low bidder, taking into account, Tamara, good job on that, the resident and non-resident issues that we have in our statutes as well.
Tamara, how is that we won?
Mr. Chairman, Tamara Revley here. Would you like me to explain the nuance of the 5% difference between a resident and non-resident bidder?
Please.
Okay. Existing Wyoming statute 166102A provides that for any contract that's let for bid for a public work, it should go to the lowest responsible bidder, except for if a resident, Wyoming resident submits a bid for that project and their bid is within 5% of the next lowest responsible non-resident bidder, then that resident gets that preference. They have that 5% preference in existing statute. So this would just incorporate that provision such that a response would be required in any instance in which the lowest bidder didn't get that unless they had gotten that bid through the preference because they were a resident.
Yeah, that makes sense. Any further questions on the amendment?
Question?
All those in favor of the amendment say aye.
Aye.
Those opposed? That motion carries. Okay, should we take a roll call on bill and we'll leave the open for the remaining senators.
Mr. Chairman, members of the committee, the vote is on 22 LSO 0149, working draft 0.7. Representative Kinner.
Aye.
Representative Larson.
Aye.
Representative Schwartz.
Aye.
Representative Simpson.
Aye.
Representative Stith.
Aye.
Representative Walters.
Aye.
Senator Garreau. Senator Hicks. Senator Kinski. Senator Steinmetz. Co-Chairman Perkins. Chairman Nicholas.
Aye.
Mr.
this
Chairman, you have
obviously-
sufficient votes. Would you like a House bill or Senate file?
I think it'll probably be a House bill. That's what it's labeled. Okay. It is 9:47. Why don't we take a 10-minute break and then we'll come back and have Rennie get our juices flowing.
All right, so we got something done, huh?
We did.
It's
As
good.
I say, we're moving in the right direction.
Yeah, yeah. I like
Okay, we're back. Next on our agenda is Rennie McKay, update on ARPA and CARES Act. Floor is yours, Rennie.
Mr. Chairman, thank you very much. Yes, Rennie McKay, Governor Mark Gordon's policy director. And so very glad to have the opportunity to be back with you. Thanks again for creating this opportunity, I think, for me to keep both you all up to date and to help members of the public get updates on the ARPA planning and the latest developments as they happen. So jump in here and also keep you up to date on the what are likely the last CARES Act dollars that are being allocated and spent here right now as well. So again, this has just been a really exciting time period for us to have some opportunity to look to the future with the enhanced federal dollars to talk about a vision. And that was kind of how the governor launched all this, was to say, I want you all to the strike team and people working on this to be considering the future of this state in what it would take to thrive. And with these federal dollars again coming in with as debt to future generations, can we make any impact that benefits our grandchildren who will be paying this money back? So, you know, if you recall, again, we received $1.25 billion in CARES funds last year, and we've received $534 million in ARPA funds so far. With the plan is another $534 will be allocated to the state and sent here next year in April or May. And then there is that other bucket of $109 million that was appropriated to the state of Wyoming for the capital projects fund. And that is that fund that's really focused on connectivity. So again, it said that, you know, the governor wanted to both look to the future with the ARPA dollars because we had more time to spend it and more time than to plan for how to spend it. And we're not under the same time constraints as the CARES funds. But with this year, there was certainly still a consideration that we needed to understand how to survive the pandemic and deal with the direct impacts of COVID-19. And so if you recall, was kind of looked at 2020 and 2021 as that survive phase. And we hope that the pandemic will continue to be in our rear view mirror more as we enter 2022. But with the survive phase and the CARES dollars in 2020, looking at the 2020 in review slide in your packet, that the emphasis there again was on small businesses and helping those businesses that were directly impacted by COVID to get through that year and to help with some relief to offset the impacts on that. And also, you know, Wyoming was unusual in the nation in our ability to keep kids in the classrooms last year and into this year. So we had a full year of experience where a lot of the country did not. So put CARES dollars into supporting education. And then the healthcare system received also a significant injection of money last year. And then we're also able to make a lot of progress on broadband last year with $50 million that went into enhanced connectivity in 2020. 2021 is we have had to still deal with some survive issues, and you'll probably all know, depending on your community and your discussion with folks in the hospital industry, our hospitals are strained right now. We hit the record number of people hospitalized in Wyoming with COVID last week, and that was a higher number than we'd seen at any other point through this entire pandemic. And the other challenge that we're really facing right now with our hospitals is it's been a really prolonged and wide surge in cases. And you know, these are very expensive cases, and a lot of time, the people who are in the hospital have to stay there for quite some time. So it's been a really tough couple of months here this fall for the hospitals. And so we did put a significant amount of money into the hospitals and long-term care facilities to deal with staffing shortage mitigation is how I'd look at it, because they've got some really critical issues in both retaining staff and then also with shortages. So folks have had to bring in traveling nurses from outside of Wyoming. So that was a big investment for the Survive phase in 2021. And that did require us to put some ARPA money in because we did not have enough in the CARES funds to fund that entire effort. And also one of the things I think that we've talked to you a lot about, and Director Robin Cooley is here from the Department of Workforce Services, was the UI tax credit. And so that was the executive order was executed and the funds moved to the UI trust last week. And so employers around the state now will be benefiting from that non-charge. And so this will be a credit that they receive for UI taxes they've already paid. And also because of that investment, it will help keep rates lower than they could be in the years to come. So that we feel like that was a $58 million in total investment. 50 million of that was CARES and 8 million was ARPA. And so again, that's a really positive way to provide some relief and for help businesses survive the impacts of the pandemic.
Mr. Chairman.
Go ahead, please.
Thank you, Mr. Chairman. Rennie, do we still have the National Guard providing support in some areas?
Mr. Chairman. Yes, we do. We have almost 100 Guard members out across the state, and they have now been in the hospital for probably almost a month. And we're getting some really positive feedback from the communities where they've been working. They're really focused on more of an administrative or they're not providing healthcare. But they're there because of shortages and to take some of the burden off. And that's funded through FEMA. It's 100% reimbursable through FEMA. So fortunately, that's been something we had almost 100 Guards people volunteer to serve in that capacity and step forward. They're not volunteering as in pay, but they were willing to take on that task and leave their homes and go do that.
Thank you.
Please.
Thank you, Mr. Chairman. So a follow-up to that. I'm aware in other states where they're trying to solve short-term staffing problems and the availability of nurses, say in particular, it's very limited. And I'm wondering what the experience has been here.
Mr. Chairman.
Go ahead.
Yes, absolutely. It's been a challenge. We essentially did this staff shortage program at the end of 2020 as well. And the cost to bring in traveling nurses jumped significantly between 20 and 2021. If you'll recall, the way the surge has kind of worked this year is that it hit Missouri was kind of the first one to see the huge case spike and hospitalization spike, and then it went to Texas and Florida. So those are two huge population areas that are very big. So they had to deal with the same thing we did. So they drove the price up and attracted a lot of nursing staff there. We were at an event with the governor, and the governor of Arkansas said his hope had been to spend all his ARPA dollars on broadband and put hundreds of millions of dollars to expand broadband all across Arkansas. But his hospital staffing situation got so severe that it eroded by hundreds of millions of dollars the ability in Arkansas to do broadband funding. So, fortunately, right now, we were able to have some CARES dollars to put into that. It was 23 of ARPA. I worry that if this hospital situation doesn't go down, we could be coming back and looking at more funding to go into that situation, because that $23 million of ARPA, 30 total, was really a short-term lift. That was about 13 weeks was what we were planning for to do. The 10 million of it was for travelers and 20 was for retention. So to do 10 million was essentially 13 weeks. So if we need another 13 weeks to help out in the hospitals, it would be probably at least another 10 million. And this is also long-term care facilities. But we weren't putting money into some other facilities or other staffing that needed EMTs. We were not able to give them a retention bonus with that dollar. So, we'll be talking to you more when the governor makes his proposal around the staffing needs across the state for the entire healthcare system, because obviously nurses are in such demand. You all probably know some in your communities. The Allure, they have the ability to be paid, up to $200 an hour as travelers. So do they stay in their community where they are now for what they're making, or do they consider jumping and moving into that traveling world?
Go ahead.
Thank you, Mr. Chairman. Randy, as you talk about infusion of some of the ARP money to help incentivize and keep people at our hospitals, the hospitals are also eligible for some of this funds themselves. And what we hear and what I'm trying to understand is if a hospital is treating somebody with COVID, do they get it? Is there funding that comes to them because they're treating COVID patients or an enhanced rate? We see emails that would suggest that. Are you aware of how that works, or if that's indeed the case? And so it's to the benefit of the hospitals that they would take a COVID patient over a traditional patient, like an old fat gray haired guy.
Mr. Chairman, I'm not aware of exactly how that billing works. I do know that there is a pot of money in ARPA that will go to the hospitals to help them. If they hire travelers and they're a nonprofit hospital or a county-owned hospital, they are eligible for 100% reimbursement from FEMA on their own. But I don't know if anybody else here in the room has an answer to exactly that.
So Renee, just to follow up on that, if you could look into that between now and tomorrow, because it's useful information that I think should be presented in the event that we have a special session. And if we go through some of these bills, we need to know those numbers and how much they're getting paid, if it's a higher enhanced rate, and basically how all those medical costs are being covered. It would just be useful information.
Yeah, Mr. Chairman, that they're incentivized to take the COVID patients over other patients. Thank you, Mr. Chairman.
I know in that same vein, I know that in some of the bills, that there's a recommendation for 20 million for hospitals for shortages of staffing, and then 10 million to effectuate that. And my question is, you've given 23 already just to hospitals and long-term care facilities. If the need exists, I mean, would it be fair to say that the executive branch through the governor's office is addressing that needs, and in that sense, that the bills that suggest that in the special session are really duplicative of what you're already doing? Is that that's my question.
Mr. Chairman, a couple things I'll layer into that. One is that while we hit the record number of people hospitalized with COVID in Wyoming last week, that is Wyoming beds. That does not count Wyoming people who have been sent out of state. And we are sending a lot of people out of state. So the incentive, we certainly have seen a lot of transfers because of the complexity of cases. So related to that, I haven't ever seen any sort of pattern where our hospitals are holding patients more. They're actually, we've got a lot of instances where they send them out quickly. So that's just one factor. But Mr. Chairman, to your point, exactly, it's a total of $30 million that went to that package for both retention and travelers. And that was really pretty time limited. We were working on it through a formula related to beds. It gets complex based on the type of facility you're talking about, but that did not translate to a lot of funding per individual in healthcare. And we were really targeting nurses and other support staff, not doctors. We're looking at kind of $1,000 bonus. Essentially, that would be a really loose, rough estimate of what it could have translated to per person in nursing. That's not very much money when you think you could be making an extra $150 an hour to move into traveling. So the retention, I do not think was taken care of already through our program. I think that was very time limited. That would probably kind of get us through the next month or so. And if the strain on the hospitals is still there in a month, it would be challenging to not have to put money in there and think that our hospitals would be okay.
Well, but if that's the case, you could simply do it again, right?
Absolutely.
So that's my point, is that you're addressing the issue and you'll continue to address it. So it's not necessary. to wait for legislation to cover that issue.
Mr. Chairman, I agree completely. Yeah, yes, with the current authority that you gave the governor through SF 118 and through the funds that are available in ARPA, that we can absolutely address it as long as we need to. It will just erode the amount of ARPA dollars that we have for other projects.
Mr. Chairman?
Go ahead.
If I can, while we're talking about that, Randy, just to follow up on that just a little bit. I've had several conversations with healthcare administrators, particularly the administrators at Wyoming Medical Center, as well as healthcare providers, nurses, physicians who are working in the hospital and working through this. And you made a very interesting point. I mean, what they tell me and what they hear is, one, the hospitals are incredibly crowded. Wyoming Medical Center, I think, is authorized for a maximum of 218 beds. I think it's got 206 beds filled, and it's got, and it can't fill the other beds because it has no more staff to be able to fill those beds. Staff is working significant amounts of overtime. People have been there 25 and 30 years, have never seen it this busy. It's all hands on deck all the time, and it's wearing them out. And so going back to a comment you made, that, you bring in traveling nurses or traveling physicians or whatever, the traveling assistants you need to provide the healthcare for the people that are in the hospitals. And they make 2, 3, 4 times what the shift workers, what the regular healthcare workers that are employed there make. And so, I mean, you got to have what you got to have, but you were talking about that. So my question to you is and I've talked to the governor, I've talked with you about this, and you guys have recognized this fact. What do you have, or is there, what do you see as how to help provide those relief and some significant, some assistance to those people who are remaining and working, doing in retention, and money at some point is never enough, but it's pretty galling to have someone come in and you're the one that's there. You're the one that cleans up the messes there, even after the travelers leave. And yet you're making 1/3 or 1/4 of what the traveling professional makes. So what's going on in that direction? And does the governor feel like he has authority to help with that, or does that take some additional effort?
Mr. Chairman. He certainly was trying to address that with that investment, because we put twice as much money into retention as we did to travelers on that front, because we did just get to that point of saying, if we keep, when we talked to nurses the first go around, they were so happy to see the travelers show up because they were so exhausted. I think that was worn down now on a second wave of cases and a second surge into the hospitals. So that's why we put that amount in there, but it's certainly, it isn't enough to overcome that difference that you talked about. That is a stark difference in pay. And we certainly couldn't overcome it because we would be out of ARPA, or we could, and then we would just be done with spending on this federal money. Is probably, hospitals alone, because if you think about that, $20 million is equating to roughly $1,000 bonus, not per month, one time.
And Mr. Chairman, if I can follow up one more, then also, are you aware of how the care that is being provided for patients is being paid? For example, are you aware, obviously insurance pays, obviously Medicare pays, obviously Medicaid pays for those that have the advantages of those programs or those policies. Is there other federal money that you're aware of that's coming out directly to hospitals to assist in this crush of cases?
Mr. Chairman, I'm not aware of that they're being compensated directly for that. There have been increases in programs like Medicaid, but to your point, to the uninsured or the insured, who then have substantial bills, either with the direct out of their pocket or their deductibles. I'm not aware of any funding that's coming to help offset that.
Thank you.
Mr. Chairman.
Go ahead. Representative
Mr. Chairman, Mr. McKay, thank you. And I'll artificially phrase this as a question. With respect to traveling nurses, I think one thing that we could do that wouldn't cost any money that would advance the ball on that issue is to positively consider a bill that the Joint Judiciary Committee is considering to prohibit non-compete clauses with respect to most workers in Wyoming. So for example, it can and does happen here in Wyoming that the healthcare service provider, whether it's the hospital or a home healthcare service company, will require a nurse to sign a non-compete agreement, right? They then cannot leave that employer without leaving the state. And so then that nurse, who's a Wyoming nurse trained in Wyoming often with Wyoming taxpayer dollars, then leaves our state. And so there's
I think the non-compete clause are limited to about 50 miles. I think there's laws out there that address part of that.
Under current Wyoming law, it's perfectly legal to have a non-compete clause if the employer gives adequate consideration for the non-compete. Whereas the bill that Joint Judiciary Committee is considering is largely inspired by Chairman Nicholas's prior efforts in this field. Wouldn't you agree?
Yeah. Okay, go ahead.
So Rennie, just going back to Chairman Perkins' question, then are we seeing hospitals with an increase of uncompensated care that they're having to absorb?
Mr. Chairman, I'm not aware of any. So I mean, I'm not really aware of the current situation. I think this has been a very challenging time for the hospitals too, but there's a lot of federal money that is flowing around at this point. And so I'll try to find out something about uncompensated care or have Eric Boley send an email to the committee.
Thank you.
And when you do that, Rennie, we're going to have time in the next 3 days, assuming that we have the special session, where we could, the JAC, could take additional testimony to find out this stuff and so we can hear from the horse's mouth.
Okay.
I think we'd like to do that. So it would just be useful to us. So as we work forward on this, Don, we'll see what we can do to actually accomplish that.
Mr. Chairman, I'll pick up and I'm going to move out of the survive. This is slide 6 in the materials that the committee has. So again, just a recap of the CARES funding status. So since we saw you all last, the state did receive $45.6 million in FEMA reimbursements. That went to into the UI trust.
Mr. Chairman, Rennie, what page on?
6. It's the title, Mr. Chairman, is CARES funding status.
Okay, thank you.
Thank you. So in those reimbursements, that was very helpful to help us with to manage that UI trust investment and to provide that tax credit to businesses around the state. So really, we are in a situation where there are no funds that are unallocated now for CARES, and Ms. Ligursky, who's here with me, has worked really hard to be in touch with the entities that have received funds to get money sent back that they were not going to be able to spend. The new deadline is the end of the year. So I think we're in a good place for that. And we are continuing to seek FEMA reimbursements. I'll turn that over to Ms. Ligursky to talk about. And then we're also continuing to get some money returned from agencies. So we do have some ideas to be able to spend that money quickly as we approach the end of the year. Director Hibbard's worked on that too with us. So we have got a couple ideas for that. So I'll turn it over to Ms. Ligursky to talk about the FEMA cost recovery.
Thanks, Rennie. Mr. Chairman, members of the committee, Erica Ligursky, Senior Policy Advisor for Governor Gordon. Just for a quick minute before I flip to slide 7 in your deck to talk about the FEMA, just staying on slide 6, everything that Director McKay said is accurate, but just wanted to give you an idea of how quickly things are moving. So this report that we put together was on Wednesday, and by Friday, we had some changes just with some agencies that have given us back some money. So we had an anticipated 1.4 million in our office working in conjunction with the state budget department. We've got a little bit over 3 million that agencies have decided that they're going to give us back. So as that money comes back in, we'll get that either redeployed or use that to offset some of the money that we had sent for the FEMA.
And Erica, then will that use part of that, of the 15 or the 3 to offset the 8 million on ARPA? That we used for the 50 plus the 8?
Mr. Chairman, that's correct. So what we've been looking at is we do have a couple of projects that we are looking at that we might continue to fund. Part of it is, I think that Director Hibbert had mentioned this morning about the overrun in corrections. So we would look maybe to see about that. We would also look to see any of the money that we spent in the ARPA funds that was either for the UI or the hospitals. How much of that could we swap out, use the CARES funds, and then free up those ARPA funds for something else? So those are things that we're just looking at as we're getting those funds back. If you flip to slide 8 on here, this is just a quick recap of the projects that we had. So we had 5 projects that we were working on with FEMA. As Director McKay said, we've gotten 41 million back for the first project, which was testing kits for community sites. We also got back 1.8 million for the West Edge collection of some media releases that went out. And we did get back 2.8 million for lab supplies that we were working on. So that money has all been back, and we have used that then for the 50 million that we did for the UI. That was the biggest part of that swap that came back. We've been working in conjunction with the Department of Homeland Security as well as the State Budget Department. We are fairly confident that on project number 2, which is the 3.1 million, it's for testing services and temporary medical staffing. As Director McKay alluded to, that medical staffing can be provided by FEMA directly. We're just trying to get reimbursed for that. We're pretty confident that that 3.1 will be obligated to us. Hopefully, we're hoping by the end of this week. We heard by the end of October.
So Erica, just to follow up on that and to tie that into our previous discussions with Rennie, if additional dollars are needed to address the current COVID issues in hospitals, those, if we could use leftover ARPA or CARES dollars for that, and we can reapply for FEMA again to get reimbursements for those.
Mr. Chairman, that is my understanding that we can do that. The other thing that we're trying to do, and I know that the Director of Homeland Security has been working with the Hospital Association and some of those hospitals to try and get them to see if they can do that directly themselves as well.
Mr. Chairman, the one challenge with that is that it's still, if it comes back, it's subject to the provisions of CARES. So you've seen the timeline where we've been on. It will be hard for us, I think, to get reimbursed in time to meet the December 31st deadline. So that's why I think what Ms. Ligursky just said is so important is it will be really important to use other funds first, because we can then get reimbursed for those and they won't be subject to CARES. So both the Department of Health is looking at this for things they're spending on to spend other dollars that can be reimbursed. And the hospitals are eligible, especially with travelers, if they pay for that it's a direct 100% reimbursement to those hospitals. So that is something that hopefully we shouldn't fund again with CARES. They should fund it on their own and continue to get reimbursed. But we were trying to make an investment to help them get going and to help. There's a couple hospitals that aren't eligible.
Thank you.
Mr. Chairman, the last project that we had on here is project number 3. And this was the one that was for the test kits for the at-home. That was one where there was a $100 million threshold that the federal government had. I think we were spending 150 on those test kits. There has been a lot of conversation back and forth in their understanding what our cost was on that. So we're pretty confident that we could get back at least 12.3 million for that. That's probably going to be closer to mid to end of November before we have that obligated. That would be one of those, as Director McKay alluded to, kind of the timing of December 31st where CARES funds is up. That's where we would look at seeing if we could reimburse some of that and freeing up those ARPA funds.
Mr. Chairman.
Go ahead.
So a question on these when we look at the amounts submitted to FEMA and then the current eligible amount talking about. So what's the differential there? Is there any likelihood that would be funded before the December 31st timeframe or not?
Mr. Chairman, Senator Hicks, we are still looking at that. It kind of goes down to the timing issue. For those on here, particularly the 26.8 versus the 3.1, that was, I think Representative Larson, you guys had a question regarding COVID patients and were those staff looking at and working on COVID patients? For that FEMA reimbursement, there is a little bit of additional documentation, if you will, that they're needing for that. So we're working with the Hospital Association and also Department of Health to try and gather that additional documentation. So we haven't given up on that, if you will, but depending on the timing, if we can't get that additional documentation and run it through the channels before December 31st, we won't be able to redeploy that. So we're just going to try, one of our last meetings that we had, we were talking about kind of when is the drop dead date where we say, let's not go after those funds because we won't be able to redeploy them. So it's still on the radar. We just haven't made that final decision yet.
So, Mr. Chairman, follow up based on that explanation. Where's the holdup in getting the documentation? Is it with the provider or is it within the state? As far as being able to get that additional information you talked about for those COVID patients and then get that submitted. What's the obstacles?
Mr. Chairman, I can get back to you on that. Sorry, Mr. Hicks, Senator Hicks. I don't know the details of that, but I can get back to you. I think it's a combination.
All right.
Yeah, I do think it's a combination of that. So we can look and see if we can provide you details on where that holdup is.
Okay, please proceed.
Mr. Chairman,
Go ahead.
my experience is with government, even in the state legislature, whatever you provide, they always want more.
That is fine. The last slide was just something that was, we thought would be interesting to show you. It is slide number 9 in your packet. So this was just historical information that we had gotten from FEMA. So in between 1998 and 2020, the state of Wyoming had 22.3 million that we had gotten in FEMA reimbursements and FEMA obligations for disasters. Starting right now in 2021 with the reimbursement that we've gotten from FEMA and the reimbursement that some local jurisdictions and then also hospitals have done, we've been able to get obligated roughly 61 million in that. So just wanted to show you that. Also on this slide, you'll see that there's 3.2 million in management cost reimbursements. That's a maximum that we can reimburse for that. So I think in the past you had asked about the cost of the consultant that we are using, and it's roughly about 775,000 that we are that the consultant is helping us with to get this reimbursement. That will be fully reimbursed through that 3.2 million from FEMA. And Mr. Chairman, if there's no more questions, I'll turn it back over to Rennie.
Mr. Chairman, I'll shift into our planning for the proposal that we're building for those ARPA dollars as we tried to look out further to the future and not just managing the survival phase. So again, with ARPA, we have had to spend some of it to deal with the crisis. As you'll see, and sorry, that slide should be ARPA spending in 2021, not 2020. 2020 just felt longer than it was. So, one of the first areas, the governor said that he would be bringing the proposals to you all, but he did want to reserve the right to make some investments. So the first investment that he is planning to make is related to the Wyoming Innovative Partnership. And this is the better aligning and coordination when we're looking at economic development, economic diversification, and workforce development across the state. And that's especially related to the critical role of the higher education, that WIP program. And so we are looking at that right now to move some dollars into that to jumpstart that. We think that's a great way to make some investments in our future to get some things going in next year. So starting in January, we could go to work on things related to entrepreneurship, jobs in energy, tourism and outdoor recreation, and the digital computing programs across the state. So this is about coordinating higher education between the colleges and UW, better building on what they do. But also the governor wants to look at those areas where we're talking about programs that translate directly to jobs in Wyoming and jobs that pay better than, so somebody who goes through the program is going to come out of it with a wage that's better than they were earning, or it is higher than that median average in their county. So we can really try to help, grow that GDP, because I think we can probably all point to areas in our communities where there's need right now for workforce, but also what are those industries of the future?
Mr. Chairman, so Rennie, is he going to do that? Does he have a proposed bill to do that, or you thinking you're going to just do that without some legislative discussion on the initiative program? I mean, we understand like the broadband, there's been direction like the 109 million, that's what it has to be used for. So, but this is, and we understand some of the healthcare, but walk me through, tell me what the intent is. Do we go through a legislative process, or is he just going to try and do a direct distribution?
Mr. Chairman, so a part of this is Wyoming Works that's already been authorized. So he's looking at refunding the cut to that. And so as we look at Senate File 118, that authority was granted to him to use those ARPA dollars, and with the ARPA revenue replacement dollars, and because ARPA is also helping to offset general fund, that there were opportunities for the governor to make those investments through the authority in 118 and through existing authority. So it's moving some funds into those programs that exist. But certainly this is the first phase of it. So, we anticipate we're going to be back in front of you to ask for more dollars, because this is not the entirety of this partnership or the proposal. This would just be to get it started, and especially with what we see as some opportunities in entrepreneurship to help as the state needs to recover from the effects of COVID.
So Rennie, on your next slide, you've got a $26 million price tag on it, I see. Can you break that down, or what are you going to do with it? How much of it is the Wyoming Works? I think that was a $10 million price tag, if I recall. But so how did you come up with 26? And what's the timing of when this is going to happen?
Mr. Chairman, thank you. Yeah, so 2.5 million was the cut to Wyoming Works. And as we've talked to the community colleges, that is the amount that it's in their ARPA proposal. It's one of the things they were looking at that would carry them both through the programmatic and the student grant side of Wyoming Works through the next biennium. But the situation is that you've got students that would need to be applying for that as early as the beginning of next year. So by moving that money into it, we can create the certainty for those students to enter those programs. And to keep that going, because I think it is an area where we've all agreed we're seeing some success, and we can restore those cuts, and that you'd be talking about a situation where we believe we're creating jobs and helping the workforce quickly on that. So that's part of it. There's also a cut to the Wyoming, I get my win. It's the Wyoming Investment in Nursing Program had a cut of about $200,000. So it would be to restore that program to help with the nursing program, which we think is particularly important right now in the middle of this pandemic to help get more nurses through the pipeline. That is just to restore the funding that is not able to get back to more nursing spots. But it is a restoration of that cut in particular that we felt like was an important one to move ahead with quickly. And then the rest of that it's $14 million would go to the University of Wyoming in particular, and $10 million would go to the community colleges. And I can provide you a spreadsheet with the breakdown by program of that. But again, what we're looking at is that the program around energy at Western in the power line industry. They know that they've got a strong connection and need workforce now. So that again, why we want to move on it quickly is because the need is there right now. We also an entrepreneurship program at the community colleges is to build on what's already going on, and that's the incubator process. So Sheridan and Casper have that 307 startup program running on those campuses. So this would allow this to expand to other campuses. So it's really, we feel like, is a chance to fuel entrepreneurship in Wyoming. So that's good across every industry, but just to get some of that going right now so that those entrepreneurs who maybe have been out of work or displaced have a chance to try to start something and have the incubator and the support system to get going. But and then tourism and outdoor rec, obviously at the colleges and UW, and then computing to help get some things going there. But the way we've talked to the university and the colleges about this is they should see these dollars as grant dollars. So it's not the same because it's only 1 year. So it isn't the same as an allocation from you and through the legislative process where you're kind of making a more sustained commitment, especially that's for the biennium. So they should look at this as a grant to them, similar to if they were applying for a private grant or a federal grant. That this is about startup, and so that we're going to have some more demands on them about their metrics to prove up their successes on that front. So I'll provide you the spreadsheet that breaks down by program, and the idea is we're trying to process that quickly because if we're going to actually have any sort of benefit in the months to come and to get some of this going, we got to go now. We've been working on this with them for months and months to see what they could do quickly to start this. This is not the entirety or the goal of WIP, but it's what could get going quickly that follows that the governor's model of collaboration in higher education to support workforce development and economic growth.
It's all good stuff, Rennie, but the issue that we have is that's a little bit going beyond what we agreed to earlier this fall or this summer on allocating ARPA dollars and the issue of whether or not it needs to be legislatively driven versus executively driven. And so I think that it would behoove you to keep us posted as much as possible on the timing and the programs that you're doing.
So, Mr. Chairman?
Go ahead.
So anyway, when you get that and kind of following up on my co-chairman's point, so what's the running total now on roughly of ARPA dollars that the governor's office allocated directly?
Mr. Chairman, that is outlined for you on that slide that should have said spending in 2021. So 23 million went to the hospitals, long-term care staffing shortage, 8 million to the UI Trust. Director Hibbert will talk to you a little bit more about the budget offsets related to general fund dollars. And then so that those are the only dollars that have gone out other than administration of ARPA. So,
Mr. Chairman?
Go ahead.
I'm follow up. So thank you for that. And so we get the budget offset 120 million per year. We get that one. But I was just adding up. And so if what I think you just told me, if I heard what I think you said, which isn't always the case, but the 23 million plus another 8 million, that's 31 plus another 26. So you're right in that, you're in between 55 and 60 million. That's pretty close to that. That's pretty close to the number that I remember talking about.
Yeah, the number was 40 to 50 million, but it was for emergency reasons as opposed to necessarily having startup programs and entrepreneurial programs, things like that. I just know that it could very likely become an issue.
And Mr. Chairman, if I can follow up, so the other thing is, I thought I remembered that maybe I remember it incorrectly, but I thought one of is either a second or I think it was third reading amendments that were put in that actually funded WIP to some degree. Is that not so? And is this in money in addition to that? If I remember that correctly, then is this in money in addition to that amount that was appropriate in the budget, or do I remember incorrect?
Mr. Chairman, there was certainly an ask. We're in talking to those institutions of higher education that the step 3 cuts that to not make them was to help them launch WIP. And so that was something that we pushed. As I understand the language, as you passed it, it was not for that purpose. Because we're also looking at maintenance of effort issues with that too. So we certainly have been pushing on them to say, what are you doing specifically with those dollars to advance WIP? And they believe that they are working hard on the collaborative part of it to align. We really do see that the colleges and UW are working well, but in terms of programmatic investments, they have told us that they are not able to make those with the step 3, the offset of the step 3 cuts. It was more their ability to plan for it. So because we didn't tie that to WIP in the language that passed, they did not have any specific actions they had to take with those dollars. So it's certainly an area we've discussed with UW and the colleges.
So if I can I say again what I think I thought I heard? Thank you, Mr. Chairman. So what I think I thought I heard was the amendment that we put back into the supplemental budget was an allocation to UW. As what I remember, we put it back into UW's budget. And then what I think I've heard you say is that we put it back into UW's budget and they used it for whatever they deemed appropriate. And it was not necessarily used for what I thought in fact, the governor had asked us to put some of this money back in. And so we, over these concerns, particularly about maintenance of equity concerns. And so we did. And now, I think you're telling us that they looked at that and said, oh, there's not enough money to do that. We've got to do this other stuff. Is that what I heard?
Mr. Chairman, I worry that I'm not speaking clearly enough since you have to ask, but I appreciate you following up. So yes, that is it. As I understand the amendment, it didn't tie it to WIP. It looked at more at the maintenance of effort side, and we have pushed to say, listen, we, as the governor's office, the governor asked, advocated for this money to go this way, but that is, it is not producing new programs or specific anything beyond the standard that went into the block grant.
Okay, thanks.
Don, can you got any more thoughts on or flesh that out for us?
Mr. Chairman, I would concur with Mr. McKay's response. The money was restored for both community colleges and the university. There's no legislative requirement that the institutions use that for a specific purpose.
How much was it?
We could look that up. I thought it was.
I thought it was like 11 million overall, but I may be confused about the amount that we thought was in that number for WIP.
Kevin is mouthing 8 million. Okay, sorry to interrupt.
Mr. Chairman, important topic, and the reason we wanted to broach it here was to make sure you did know it. We'll probably talk about intent then of what the governor's commitment was in the letter that he gave to the legislature as the WIP dollars came in. I believe it was a little different than you framed it up, Mr. Chairman, in that the 50 million was going to be spent subject to existing law and what was in Senate File 118. And if there were more emergencies, that it could actually drive the cost up. So that is the situations we do feel like, unfortunately, we've had to deal with more of a crisis situation here this fall than we had planned. And that's why it's exceeding the $50 million number. But that was certainly the target was 50 to not and to respond to any crises that came up, but also opportunities that came up. So it may have been around that opportunity language that I think we diverged.
We took opportunity of it.
Good comeback.
Mr. Chairman, the process is that the B11 will be in front of you all for 10 days too, as part of that normal process. So before anything is spent, it will be with you all.
Okay, go ahead.
Great. Okay, so just again to now look at what is going to be coming to the legislature in that package in December is all based on that strategy around Drive to Thrive. So as you recall, the governor set up that criteria for how he wants to spend these dollars. And I think that there's some strong alignment with folks on this committee around we need to leverage dollars, we need to be strategic and have as wide an impact as possible. So the strike team continues to work on proposals, and now we're really in the refining process with those. So again, thanks to the legislators who have participated. We've got the county commissioners represented, the municipalities, and then cabinet members who, can work full-time on this to have outreach to their stakeholders as well. Again, one of the parts of this was not to say only look at this through the lens of the federal act, but to look at it as what is in the best interest of Wyoming. That will be a filter, obviously, as we move ahead. But this has helped us be prepared, I think, for the other opportunities that have come along. The EDA has a grant application open right now called Build Back Better, and there's the possibility of millions of dollars coming either to a region of Wyoming or Wyoming as a region. On that front, we obviously have the capital projects fund, and then also some of the other COVID response programs that have been created. And then we will see what comes next out of Washington, D.C., but we do feel like we're prepared to offer some more strategic ideas if that does pass, and also some more strategic ideas related to general funds. And again, with the general funds and those that have were created because of offsets of ARPA, that all will be coming to the legislature. So goal one, we've talked about this. This is that really broad idea around that is kind of the complete vision for this strategy. But a couple of specific areas have come out of this around housing. And so this has been a really positive discussion, because I think we all know that housing is going to be a factor that impacts the rest of economic development. And so we've got an idea that we'll bring forward to you related to getting additional units built in Wyoming, and especially where the federal funds go is more in the low income, 80% of the median regional or area income. And so the moderate is more like 80 to 140. And so that's an area where there aren't dollars, but we also aren't seeing the private sector take care of the need. That will be the focus of the proposal that will come to all of you. And childcare, Director Schmidt is here, so she could keep you up to date on the emergency rental program. And then also she's been working to use the $26 million that her agency received directly from the federal government through ARPA to help childcare. And she's looking to the future to try to make that as an effective program as possible to stimulate and create a better future, rather than just offset and provide relief for the last year, although that's an important part of what she's looking at as well. Goal 2 is that economic diversification goal. And so the Business Council is the lead on this, but they're working with the energy sector, also the agricultural sector and tourism to come up with proposals on this front. And again, they really benefited from this process to be prepared for the EDA grants and also the infrastructure bill, in my mind. Goal 3 is workforce and education and economic development through education. So Director Cooley is the lead on this goal, and she's worked closely with the institutions of higher education. And so develop these 4 strategies to look at the proposals that are coming in on that front. So again, as WIP if it is to grow and come to fruition, it would be something that we have to do in tandem with the legislature. And so looking at how that would be funded beyond those startup dollars that the governor is looking to deploy. Goal 4 is around broadband and connectivity. And largely this is working just what the Legislative Broadband Task Force has done with the Connect Wyoming 2 program. That bill has $150 million in it. So, looking at some potential changes compared to last year's Connect Wyoming program that are outlined on that slide. And we are planning to start taking proposals so that by the time you all are here, you have a good sense of kind of what the demand is and what the eligibility is as we look at the federal act. But as we talked about before, there are also other dollars out there that can support broadband, and that capital projects fund is one of them.
Mr. Chairman.
Go ahead.
Thank you, Mr. Chairman. Rennie, how are we coming on the mapping project?
Mr. Chairman, thank you for that question. It's going well. So it was an area where we deployed funds this year. As you recall, last year we ran that program and we had to use a map that was provided by the FCC. And that was the only tool we had to determine unserved and underserved, which was the criteria in that federal law. And we found flaws with that map. So we wanted to create our own map so we can be more intelligent and have a better system going forward. And so thanks for bringing that up. The mapping project is going well. If I can make a plea, since you all are in your communities, the Business Council has a testing site right now that's running. And so they're trying to actually gather additional data, you know, that they've got what's reported and what they know. But one of the things that kind of ground truth it with is having people run a home test. So if you search for Wyoming Business Council broadband test, you'll go to a website, and if you participate, it'll run a test to check your connectivity speed from wherever you're located, and then that will feed into the map. So it's anonymous, but it just helps go by location.
Well, thank you.
Yeah, thank you. Mr. Chairman, do you want to talk at all more about that capital projects fund? I know there have been some questions out there, but in particular, I could pause here to talk about it if you had any questions.
Yeah, just give us an update.
Okay. Mr. Chairman, thanks for we knew the allocation, the guidelines have come open and the application period is open. And it's many pages and to dive into. So I know a lot of people around the state are looking at the guidance as it's out now. But what shifted a little bit, as I understand how this program is going to run, is that what we need to submit by December is not the list of specific projects, but more an intent to apply. And then we have the 365 days, the year actually started, I believe. So we'll have probably about 10 months to put in the specific details about how we align with their guidance and how we'll use the dollars. So there's some time for us to collect and be strategic about the details of the program, but we do need to essentially have our notification of our application in by December. So we can run that through the governor's office and work with all of you on the specifics of it. I do not believe we will be allocated dollars. I think we'll only be able to apply and I have
the guidance broaden the possibilities of what we can do with it.
Mr. Chairman, in some interesting ways, there's a few of you who have passionate librarians. One of them is in Casper, and libraries are eligible for construction dollars. So that was something I didn't see coming until we got into the guidance. But because libraries could facilitate people being able to telework, do telehealth, and do teleeducation, there's a lot that's an area where there's more eligibility than I thought there would be. And so you may hear some questions from passionate librarians about how they'd be interested in this, but we're working with the state library to kind of coordinate and potentially look at that to bring a proposal forward that's a little bit more built out about what we might do. But that's an area that expanded that I didn't see coming. But really, generally, you know, they want connectivity that would apply to all of it. So a broadband project to put fiber in the ground to serve a community is very eligible. The details of something else, like a connectivity program or anything that is related to CapCon, is a little bit narrower. But I think especially if we can tie it to the ability for people to access the internet and do those things, if it's a community center or if it's a institution of education or higher education, that might be a space where we can find some eligibility.
So with improvements to court systems to allow more connectivity fit?
Mr. Chairman, I'm certainly looking at that one too with the e-filing system and its expansion, if that's eligible. And I don't know yet. So that's an area though, that one is on our list.
So Randy, you just spoke about 150 million in a draft bill for Connect Wyoming. Then we have this additional 109 million that really, I think the intent of the ARP funds is for connectivity. Are the two aligning with each other? And is I'm taking it the 109 would be in addition to this bill that we have out there for the 150, right? But can you tell me, are we, I hope we're trying to take advantage of each of the two as we move forward.
Mr. Chairman, as I've said to you all before, the 150 million is from but from legislators, not from the executive.
I understand that.
Okay. The way that we are planning to run the Connect Wyoming program is take those applications. So then we'd have a sense of which pot should we fund them from and work with you on that. And there's other pots. There's not just those two. There's not just ARPA and not just the capital projects fund. There's about 2 other programs and we have an application in for $30 million that would fund one of them.
And the upcoming structure bill. Okay, go ahead.
Great, thank you. So goal 5 is related to healthcare in particular. And so the healthcare task force has been working on this. Some key areas are obviously workforce in that space, the emergency medical system, EMTs and coordination and improvement. If we can work on that, that has been a real focus for the healthcare task forces, is looking at the challenges that our emergency medical system is facing right now. And if we can start to explore some solutions, and I think maybe that's a good example of how we're looking at some opportunities with these, is just to see if there's a project, a pilot that we can try and see if it is effective. And if it is, then, we'd be coming back to ask for either more ARPA if it's still available, or, if we learn so much that it's so effective that it's a discussion that people would say, okay, this has helped either create a more efficient process or a much more effective program for the delivery of that kind of care. Infrastructure, I think you've all heard of the demands around infrastructure for hospitals and long-term care and other human services facilities. And then also around mental health is going to be a big area for us moving forward as we build out these last proposals. Representative Schwartz, I believe, is the one who's asked me in the past about elder care for senior citizens. There are definitely some proposals that align with that, that are coming through. And then, again, the challenges and opportunities of ARPA there are other dollars that went directly to the Department of Health and went to every state. And some of those went right to the senior care division at the Department of Health. They would require a match. Aging. So thank you, Representative Larson. And so that would be something that would be coming to all of you to fund the state match for some of those ARPA dollars, and then to look at these other proposals. But it is an area where, again, ARPA is providing opportunity to the state, but we'll have to look at how to fund it if we want to fund it.
Mr. Chairman.
Go ahead.
Mr. McKay, I just wanted to thank you for your efforts, the governor's efforts, and Jen Davis in the office on the governor's healthcare task force with its work with EMS services, because I think that's a real area of opportunity for us, because ambulance service in a rural area tends not to be a very good business model because of low volume. And so I think the efforts to use some of the ARPA funds to maybe jumpstart and transition to an EMS system that's more stable makes a lot of sense. So appreciate the efforts on that.
Mr. Chairman, I agree.
Representative Schwartz.
Thank you, Mr. Chairman. So first, Randy, thanks for acknowledging my question about seniors in Wyoming. But I'm looking at goal 5 and mental health enhancement. And I've been working on this in our county, and it's just during COVID, the demands have risen dramatically just for basic counseling. So I'm wondering, when you say mental health enhancement, what you're envisioning that would be.
Mr. Chairman, I would have Ms. Davis from our office maybe talk to you about the full work of the task force, because it's broad in terms of, suicide prevention and what we need to fund on that front, as well as just access and then improvements beyond that. So there's definitely telehealth and telepsychiatry is one of the areas, and suicide prevention is another area where there's a lot of focus. But you also then get into substance abuse and concerns around that. Mr. Chairman, thank you. Goal 6 is the outdoor recreation and wildlife goal. And there's certainly some bold ideas that have come forward from the outdoor recreation community. We really appreciate, thinking big. This is an area where they're doing that, but it also shows the scale of this, of, the idea of a new state park would cost, upwards of $50 million alone. So even if we were to try to create more of that infrastructure that they can help drive the economic growth around it for the industries that feed off of outdoor recreation users, we're talking about big dollars. So we certainly on our side have some work to do to pare these things down, but it's great that we've got some ideas out there that can do that. But this one on the outdoor recreation side is really about building out the experiences and the opportunities for people to do outdoor recreation. And we think that feeds back into economic diversification. So if you're an outdoor recreation based business, you need, and you'll want to locate around where there's infrastructure and outdoor recreation opportunities. So those two go hand in hand. And then on the wildlife side, we just feel, especially as you look at any growth in outdoor recreation or other industries, can be impacts on wildlife. So can we mitigate some of those as we go forward to look to expand the economy? Goal 7 is about the food supply and food pantries. Director Schmidt, I want to thank her for the work on this front. And it's an area where we still need to learn more about that. And so she's strategically looking to build out an idea that will help us better identify what's needed. And we think there are going to be those examples of that where we work a little bit this year if you deem it to move forward, and then bring you a bigger proposal next year. And this would be an example on that front. Goal 8 is infrastructure and what we know is allowable, or broadband and water and sewer. Again, broadband goes back to goal 4 for water and sewer. And we do have an outline of a program. I want to thank Representative Simpson for his work with our office and the cabinet on developing those ideas. So kind of a programmatic proposal for how to run applications and take applications and set the criteria for how those dollars would go out is what we'll bring to you in December. And we may, if they're eligible, also look at some of the big projects because there are some priority areas for us on that front as well. And then obviously looking to see if there's any examples of where we can find ARPA eligible public safety infrastructure. There's some needs like WyoLink and other things on that front that we hope we can take advantage of with these ARPA dollars, because that will offset the future cost for the state, and that helps us all keep taxes low into the future. Goal 9 on state employee retention is as we've looked at the future of the state government and our ability to provide those needed services, where COVID has really exacerbated that. And so we're looking at the kind of full suite of proposals, and I believe you'll hear from Director Bach today on kind of how big a challenge that is right now. But we recognize, of course, that that's a challenge across industries in private and public sectors. Goal 10 is around efficiency. So we'll continue to look to see if there's any opportunities on that front, work with you on any proposals that come forward there. And then lastly, similar to kind of how that water is set up is, last year we ran that program to allow cities and counties to apply and the towns and tribes to apply. Obviously, they received their own money directly this year, but in a lot of instances, that doesn't go very far. So if we're going to really create anything of high value, we probably need to leverage funds and look at that. So we'll bring a proposal to you to see if that's something to move ahead here next year. So that's the overview of all those goals and kind of the shape that the specific proposals are taking. We'll be back here with the built out proposal in December. The governor's looking forward to come chat with you himself about how he sees that proposal. Here in November, we're going to continue to take feedback. So if you're hearing ideas that are percolating, we've seen other states, legislatures pass bills that have allocated their dollars. So if you've seen some great ideas from other states, please let us know. We're certainly the reason we asked some legislators to sit on that strike team was to utilize your connection to your home communities. And so we'll keep building out data too to try to have the proposals be as focused on outcome and metrics as possible.
Okay, further questions? Is that it? So we had a few questions. Go ahead, Don.
Mr. Chairman, before we left the topic, I wanted to confirm it was 8 million for community colleges and 8 million for UW in that JCC action.
So we had a couple of questions about hospital expenses and stuff like that, and Eric Boley just showed up to give us a couple answers. Why don't you come on up, Eric?
Where's your tie? In fairness, Mr. Chairman, he says, I don't have my tie on. So I told him to come anyway.
Morning, Mr. Chairman, Chairman Perkins, committee members. I'm Eric Boley, president of the Wyoming Hospital Association, and I was listening online at the office and heard Rennie refer to me as the horse's mouth, which is the opposite end of what my wife refers to me as. Well, I know that too, Representative Larson. Thank you. Anyway, I heard that there were some questions. I only heard part of it, but I offered to come over and I do apologize for not
go ahead.
being dressed appropriately.
Lloyd, go ahead. But
So Eric, what we hear as we're kind of getting ready to go on special session and some other things is that there's some incentives or enhancements, if you will, to hospitals if they're treating a COVID patient, and that there may be situations in some hospitals where they're not admitting what we would call maybe a traditional patient. I don't know what the right term is there, in order to, because you can make more money off the COVID patient, bottom line. And you may have heard this as well, but I think it'd be important for us as a committee and maybe publicly to kind of hear it from your association on how that works.
Sure, Mr. Chairman, Representative Larson. So there's a lot of misinformation floating out there. The reality is for a Medicare patient only, Medicare, we bill under what's called a DRG, or a diagnostic related group. That's the code that we use to get reimbursed. For a Medicare patient, there is a 20% add-on. The reality though is these patients are staying much longer than a traditional patient. We're actually losing money even with a 20% add-on for Medicare patients only. There are no incentives for any other payer, whether it's commercial, Medicaid, other government payers, but there is that 20% add-on.
So when you say a 20% add-on, that's to the Medicare rate.
To the Medicare rate,
which is nowhere near what an insurance company pays.
Mr. Chairman, that's correct. It's always, usually we don't even cover our costs with the regular Medicare rates. And then we could spend a lot of time on hospital finance. There's a truing up that's done at the end of the year, cost report settlements where we may owe money back or we may get additional payments. But there are also certain expenses that are not allowable as expenses when we are trying to reconcile our actual costs. And so the thought that we're actually being incentivized and it makes us change our habits it's not true. The other thing to realize is that EMTALA, which is what we all operate under, we have to take every patient as they walk through the door. We have to look at them, we have to treat them, stabilize them, and then figure out the appropriate course of remedy for them. So no patient is turned away, but what we are finding is that we have so many COVID patients. And again, today it looks like we hit another record for hospitalizations based on the ability to staff our beds. We're having to look at who we do bring in. We're trying to transfer as necessary, but Idaho is already rationing care in a lot of their hospitals, and they're turning people away. We've had facilities have stopped doing procedures that actually make them money, elective procedures, because they don't have the staff to take care of both those and the COVID patients. And so
has there been any type of an analysis done to figure out how much money you're losing by not being able to do your elective surgeries?
Mr. Chairman, it's a really good question. And one of the biggest problems we're dealing with right now is the dust is still settling. And so there's been such a huge influx of money going in and out, different incentive programs from the federal government. First, it was the CARES funding. There was direct contributions or distributions made to the hospitals and nursing homes. There's another one going on now. It's phase 4 of the provider relief funds that they're applying for right now. There are ways that we can use those monies and not use those monies. We could get accelerated payments. So early on, we were able to apply and receive future Medicare payments at an accelerated rate, but then we have to repay those with interest rates. All of that's still being figured out, but our hospitals are not in the financial shape they were before. The problem is we don't know where everything's going to end before we can truly account for it. We're still getting guidance from the federal government on how we're supposed to account for the money, how it can be used, whether or not we have to repay it. We're repaying some of the CARES funding right now, even though Congress is talking about extending the deadlines. It's a real mess, I guess is the best way to describe it.
Mr.
So
Chairman.
Eric, one of the other questions we had asked Rennie was, do we have a feel of has this COVID stuff created a bigger impact on hospitals' uncompensated care? Or can you help us understand how that is? And then you made a comment there that hospitals are not in the shape they were. Explain what that meant, please.
Okay.
I didn't track that.
Mr. Chairman, Representative Larson, I'll try to track. So as far as hospitals not being in the shape they were, we're seeing huge staffing shortages. We're paying a tremendous amount of money for travelers if we can find them. This is one of the toughest parts. So December of last year, we received some CARES funding to help bring in traveling staff. And we were able to place 325 traveling staff across the state. That pool of nurses and other staff is no longer available. We're competing with surrounding states and there's a huge shortage. At that time, we were paying $125 to $135 an hour, which is about almost double what we normally paid in normal circumstances for traveling staff. We're seeing rates now of over $200 an hour for an RN. It is starting to stabilize, but the problem is the pool of travelers doesn't exist. So that's one big problem. The other problem is that we're seeing our workforce shrink just like other industries are. And it's for a lot of different reasons. A lot of it has to do with burnout. This COVID pandemic has been really tough for the staff members, especially in long-term care, because they've watched people that they care for die without really being able to do much to fix that. What was the second question?
Uncompensated.
Uncompensated care. So we were seeing uncompensated care grow before we went into the pandemic. Again, it's hard to analyze just because of the influx of money, but as we take a look at how it can be accounted for and used in our financial statements, most of the money can't be used as far as revenue is concerned. It's basically used as a pass-through with specific requirements in place. And so we expect our uncompensated care to either be at the level it was or an increase when we are finally able to go through all of the accounting measures.
So, Mr. Chairman, with the program, if I may, with the programs that we do have available out there that are coming in through the infusion of some of the federal funds and what other, do any of them address those people that can't get insurance or that can't be on Medicaid? You know, that hole we have there, that 0 to 138 degree of anything, is there anything there to help them if they come in with COVID related issues?
Mr. Chairman, Representative Larson, we've been assured that, and I think through our programs, some of the federal programs, we've been assured that the COVID patients would be paid for. Now, what that looks like, I don't know, but the new provider relief funding does allow us to apply for and account for some of our lost revenue over a period of time. And that's the first one of the federal programs that's addressed that. Again, they're in the application process. And as I was listening to some of the testimony, even some of the FEMA reimbursement and things like that, we have to be able to very specifically prove that if we want FEMA reimbursement, say for staffing, we have to very specifically be able to prove that the hours spent were directly related to COVID patients, which is really difficult. And I think that's one of the things that is going to be difficult as we move forward, is how we have to actually account for and report how the money is used and how it's allocated back towards COVID.
Mr. Chairman.
Go ahead.
So, Mr. Boley, thank you. It sounds like the bottom line you're saying is that if patients are getting turned away, say for an elective knee surgery, for example, that those decisions are being based upon medical reasons, not economic reasons. That's what it sounds like you're saying.
Mr. Chairman, Representative, the truth is there's no room for them. And
right. And if the hospital's sole goal were to maximize its revenue, it might turn away, a COVID patient in favor of an elective surgery patient if that person's insurance has better reimbursement rate.
Mr. Chairman, Representative, if that was a decision we could make, I'm sure we could, but our mission is to take care of those that need help.
Right. And final follow-up, you mentioned the financial condition of hospitals being not as good as it had been. And I'm just not familiar with how the reporting is done. Is there a publicly available website or some other way to get the information to see what the effect is? Because I can imagine there being offsetting influences. And I can imagine that the staffing shortages and the administration of it's very difficult for them right now. Hospitals in some ways are like hotels that have really fancy room service, right? And so if in normal times you have 50% occupancy with high paying patients, but if you have 100% occupancy, a hotel likes that, right? So I can see there being offsetting factors at play. Is there going to be any sort of statewide data that we could eventually look at to see what the true economic impact of this pandemic is on hospitals, say for 2021 at some point in the future?
Mr. Chairman, Representative Stith, so our public hospitals, they all file their audited financials with the Secretary of State. So those will be readily available. I think the big problem we have right now is just figuring out how all of these influxes and outfluxes of funding are going to factor into the bottom line. But yes, once we go through both the reporting and the audits, that'd all be readily available.
So, Eric, you mentioned that we set a new record today in terms of bed count, or
bed counts with the ability to staff. Yes. Yeah.
What does that mean?
So, Mr. Chairman, I'm sorry. So early on, we had more capacity because we had more staff. And so our ability now to take care of COVID patients is limited because we do have beds available. We don't have staff available. And so it's proportionate, but we're at a very high level for the number of staff beds that we have compared to other times.
What are your numbers? That's what I want to know.
I'm trying to remember off the top of my head. It's over 200, Mr. Chairman. Again, I think the highest we've been is around 240, and I think we're right there again based on the report I saw. It came to the department.
And of the COVID patients, what percentage of them are unvaccinated?
Mr. Chairman, I don't I don't have that in front of me. I know that it's being tracked. Last I saw was somewhere around 90% was unvaccinated and 10% were breakthrough.
So would it be, whatever those numbers are, could you email them to us? Whatever you can come up
Yeah.
with, so we have the most current and updated numbers.
Yeah, there's a daily report that comes out and we can share with you, Mr. Chairman.
Has the Medical Association or the Hospitals Association taken a position on vaccine mandates?
Mr. Chairman, it's funny you should ask. That's what I was poring over the 20 bills that we're going to be considering in the next 3 days. The Hospital Association.
You mean these?
Yeah, just those little short ones there. Hospital Association believes strongly that vaccines are the right solution to the problem, but we have not endorsed the federal mandate. We actually think it's problematic.
Our Senator Steinman.
Thank you, Mr. Chairman. Since you're bringing up the vaccine mandates, I was just wondering how much of your staffing issues are from people who don't want to comply with the vaccine mandates. Is that having an effect on your staffing levels?
Mr. Chairman, Senator Steinmetz, I didn't bring up vaccine, it was chairman, but I'm gonna have three fun days talking about that coming up. We have not seen a tremendous impact yet, but we do see folks that are talking about what happens if the federal mandate. There are folks that are leaving the industry because of the mandate, but we aren't seeing large numbers. And even in those facilities that have mandated vaccines, the amount of, because there are exemptions available for them, we haven't seen a tremendous outflow of staff.
Follow up?
Go ahead.
Okay. Well, and since you brought up exemptions, we are seeing some being denied. I'm in a community with a Banner facility who is mandating vaccinations. So I'm hearing quite a bit about it. So I'm wondering how it will affect you should those people choose to leave. If you're already short-staffed, we don't have a lot of travelers. How much good can an influx of money do if there just simply isn't staff?
Mr. Chairman, Senator Steinmetz, this is a great question. I know that the Banner facilities have granted 12 or 1,400 exemptions, I believe is what I heard last. I'm not aware of those that have true exemptions being denied, but it may be a situational thing. And I think you've hit it right on the head. You can throw as much money at a problem as possible, but if there aren't bodies there, and this isn't the only industry facing this, there are going to be issues. We were already facing a staffing shortage in healthcare before we got into the pandemic. And I think there are a lot of different circumstances and reasons that we see people leaving it. This is the one people seem to be focused on, but there are a lot of other underlying reasons that we see people leaving healthcare and other industries to stay home.
So Eric, do you have figures on the percentage of folks in hospitals around the state that are vaccinated versus non-vaccinated? And I hear different numbers anecdotally, but do you have hard numbers on that?
Mr. Chairman, you're talking about staff members. I do know there's a very robust report for nursing homes in particular, and I believe we could get you that information. We may have to go to each facility. I believe the same report, it's HSN, I believe, keeps track of the hospital vaccine rates, but we can definitely pull that report for you.
Yeah, I mean, obviously the sooner the better.
Yeah.
Okay, any other questions for Eric? Go ahead.
Couple questions, Eric. While we're stretching your brain cells. First of all, I've had some really conversations. Healthcare administrators in the hospital there in Casper. And what he tells me is essentially that they're full as far as they have as many beds that they can staff, are filled. And so he's saying that so far they haven't had to turn away anybody from Trona County, but what they are is diverting patients that would otherwise be coming to Trona County to Wyoming Medical Center from other communities in the state are now being diverted elsewhere. And many of those, unfortunately, are probably being diverted out of state. Is that consistent with what you understand is going on?
Mr. Chairman and Chairman Perkins, I think they're trying to find any place they possibly can. I heard the other day, actually, we had one of our smaller hospitals that had a COVID patient. They called 128 facilities in 7 different states before they could find somewhere. And so problem that you're facing in Natrona County, it's regional. We're seeing it spread across, but we're also seeing facilities expand and stretch themselves a little bit to see who they can keep in because beds are at such a short supply.
Okay, and well, I'll just save the rest of it for later. Thank you. Thank you.
Come on, you do it now.
No.
Okay, any other questions for Eric? We appreciate it. And obviously, as much information, real data that we can get, the better, so we can make better decisions. So
Yeah,
we appreciate your
Mr.
system.
Chairman, I'll work on getting that over to you today.
Yep.
Thank you.
Okay. Anything else? What's next? I thought Kevin was going to say something.
Mr. Chairman, I'll be very brief. But in front of you, you should have the status of funds for ARPA. And it's still pretty limited in the activity that we have, and that'll change here shortly. But first of all, we are putting the request for the 10-day waiting cycle on a B11. Certainly, if we had an emergency like discussed in the hospital, we might not do that 10-day period, but we talked to the chair certainly. But we are going through ARPA for the 10-day waiting cycle. We do have the $23 million for the public health that we added since the last time we talked, along with the other $8 million that we have for the unemployment. And if you go to your chart and just add a little box right there, it's missing the $8 million. Erica and Deputy Auditor Troutwine and I will select a consultant tomorrow. And then we will work the contract for ARPA administrative assistance. The first priority will be to assist the strike force for the ARPA, as Director McVeigh discussed today. It's a big lift to get all the things in place for the federal reporting. One example would be the consultant will assist us with all the documentation necessary to provide the AG's office so we can get affirmative approval that the plan is going to be funded by direct ARPA, or in the case of necessity to go to perhaps the revenue conservation. The consultant was not put into that box that says 248,100. That's basically for software and for us to have a couple AWACS. When we're finished with a consultant, we will bring that over through a B11, and you'll have your 10 days to look at the consultant selection and the suggested amount that we would pay that consultant over the life of ARPA. Most likely, we will be able to get the consultant in maybe 1 or 2 years. And by that time, we should be able to be in a place to be strong enough in the state to follow through with the reporting, because really building the plan, getting the appropriations, getting all that stuff, that's the heavy lift, the task force, strike force, for example. The $8 million for unemployment is correct. We get late FEMA obligations. FEMA calls them obligation. That's when we have the cash that we can go out and spend it. So that $8 million, if we get late FEMA, then we can retract the ARPA, get it with CARES money, and then have a better plan. But our mission is to make absolutely certain that every single dollar that's available for CARES is spent by December 31st. And we have a couple of fallback positions, certainly the $8 million for unemployment, and then corrections over time. We talked about that and a few others that we're in a position to react to. The process, Representative Larson, you asked a question earlier. It's going to be a governor's letter. So we'll submit. Right now, what we're doing is we're working on a budget, state budget, and it's plenty complicated because of step 3. The only thing in there is going to be the standard changes for corrections and the Department of Health that we discussed to maximize the revenue assistance. And if we see some permissible amounts of money that we can expand upon increasing the revenue assistance in the best interest of the state of Wyoming, we will do so, but it will not include ARPA requests. And there's also plenty of moving parts out there. The other agencies are are receiving direct funds. We'll also have the consultant make sure that we address those clearly. Where I have a full understanding of the full expanse of federal contributions so that we can make certain that we don't double spend on one event or the other. But you'll get a governor's letter after we submit the budget on November 15th. Then later on, we'll get you a governor's letter through the strike force. And then that will be populated in IVARs for LSO for the chart fields, important object classes, positions, that kind of thing, whatever happens. One of the things that Director McKay brought up was efficiencies. Right now, we're looking at a really good study that Idaho did on the state's use of IT or technology. And we've all been looking at how we can use IT more efficiently. It's been discussed in here, but that consultant contract review is pretty nice, and we'll share that with you. But what it does, they call it a situational analysis. It's really an inventory of everything the state of Wyoming is doing. Every little software package that's running around. How is it getting funded? What source of funding is it? Could it be a little board? It could be a university. It could be WIDOT. Every single thing that the state of Wyoming is doing, situational analysis or an inventory. Once you have a strong inventory, then we look at a fit gap. Can our current financial system manage this? Or how would we implement a change to maximize the efficiencies? So that's one of the areas that we're discussing as far as the efficiencies, as far as the survive and drive phase go. So basically, Mr. Chairman, that's kind of the roll up of the status of funds today.
Questions for Kevin?
Mr. Chair.
Senator Group.
Thank you. Director Hibbard, did I correctly hear you to say that we could get a copy of that report from Idaho that you were discussing?
Mr. Chairman, yes.
I'd like that. Thank you.
We will be handing that off. I've given that to Director McKay, and then the strike force will see it, and there's no reason why this body can't see it as well.
Okay. Any other questions? Thank you. Okay. So it's anything else for the morning on our agenda? I think we're about there. It's 11:50, so we'll adjourn till 1 o'clock.